Good morning. What's up, gang? How you guys doing? Happy Friday to you, wherever you're joining in from. All right, let's get it. Let's get right into it. Let's get it. Let me let me share the stream real quick. I don't know why. So my phone right now is actually copying everything that I'm saying. All right, so if you guys have any questions, stocks you want to cover, I'm going to run through some of the news that we have this morning. I give you some of the levels. I've kind of already went over them. Just let me log in real quick. I'm going to be watching technology today. Man, I really am upset that I missed that Goldman Sachs trade yesterday. What a monster, right? What a monster of a move. So this is exactly why we say understand what index, like what part of the market is getting that institutional money flow, so you can pounce and get paid. I think my man Chris got paid yesterday. He took that Goldman Sachs trade, but I ended up feeling like I missed that VWAP pullback here. No big deal. I think there's a lot of things setting up today. We'll get our answer. So I really thought about last night some of the things that depends. So like yesterday, right? Yesterday morning, I did not have really a watch list because I was busy during the morning, and I think a lot of that kind of messed me up. Again, the market also didn't move either, so I think I've been doing like a little bit too much. So I needed to focus on just what am I trading, what am I looking at, what do I need to be looking at first off, right? Which we're going to cover now, and how am I going to trade it? Write it down, stick to what I write down, unless something fundamentally changes, So, but if you guys are new, also, if anybody here is new, let me know in the chat. If it's your first time here, if you guys could hit that like button, subscribe. If you don't know, we are doing a giveaway. We get to 1,000 subscribers, you are entered into the giveaway. As long as you like the stream, subscribe. I got a really cool giveaway. I think you guys are going to be really surprised about what I do for 1,000 subscribers. But I think it's a big milestone. But anyway. Bitcoin's down a little bit. No big deal. I noticed this morning and I posted, man, financial conditions are making a new low, which is crazy. This is insane. I thought the Fed was supposed to be tightening, right? I thought we were supposed to like cool things down a little bit. Look at this. This is insane. Look at this. Adjusted? Like, man. So keep an eye on that. The lower that this goes, you can count on the markets. Wait. Okay, I was going to say, hopefully I had it where I needed it. Yes, we're making a new low. So this is pretty much the inverse of the SPY and a lot of things. You could say that this is the dollar maybe. However you want to look at it. Pretty much like this is, credit, all that fun stuff, leverage, all that stuff. All right, just to get technical, let's just say this is when financial conditions are easing, it's not tightening, plain and simple, right? The Fed was adding liquidity to the banks for the bank term lending program, and I thought that was a major part on why this was pulling back like it was, but apparently, so we'll see. We'll give it some time. This is probably what they need for a soft landing. And you know what? This actually doesn't surprise me because they stopped the balance sheet runoff. The Fed said that they're pretty much done with balance sheet runoff. Like, they didn't hardly run anything off. So my question is, are they going to put that stuff back to work when those expiration dates come? I guess that's what they mean. They're going to continue to provide liquidity to the markets for a soft landing. All right, news. Baidu and Apple. This just hit not too long ago. All right, Baidu, and so Apple. Well, Google was down. It ended up wicking. All right, but um, so Alphabet and Baidu. I don't. I guess I gotta log in right now. I guess I gotta log in because it's whatever. Let's see here. Charge my CEO. So there's been a lot of selling other than what I'm getting ready to get into with Apple and Baidu and Google. So we'll start with that first though. There's been a lot of selling with like Meta. He sold a lot. If you guys know SoundHound, there was like I think it was only like a $500,000 worth of was selling from one of the CEOs. But Mark Zuckerberg yesterday sold a bunch of Meta. So there's a lot of selling being taken place up here. That doesn't mean that the markets have to roll over. But if there's selling going on up here at highs, you're supposed to buy low, sell high. So when people get mad at politicians and stuff like that, like this is how you play the market. Like people think it's so hard to make money in the markets, but if you just do what you're supposed to do, buy low, sell high, not buy high and sell low. All right, like they get mad at Nancy Pelosi for going long NVIDIA, like, or just buying calls on some of the best companies when they're down on their lows. Like it's not hard. Sure, swing trade it. Go buy in the money yearly calls when the market's down. Eventually, you'll be back to break even or make some money. All right, you just have to understand the sentiment. AI was a big play. You get the pullback. So. But anyway, Google receives a rating update. Let's see here. Oh, that's Pro. See, I have to log in. All right, I have to go ahead and log in here. But Alphabet was pulling back off of. Let me refresh real quick. Alphabet is pulling back off of Baidu and Apple News. Okay, so. But that was the Goldman Sachs trade yesterday. So sorry about this, guys. Real quick, let's see what Apple's doing. I didn't even look at Apple. I think this is crazy what they have going on with this DOJ. And this is why I just can't wait. I just want this administration gone. I really do. Like, it's not even just Joe Biden, but it's the cabinet. They keep doing stupid shit like this. So, Apple's not really... I think Baidu is going to be the winner of this. Seems to be the winner. I would look for a bounce back into 174. All right. Bounce back into 174. On Apple. 174. Bounce back on Apple. I want to see a pullback into yesterday's close. Or like yesterday's low. All right. I want yesterday's low to hold. If you guys can see here, it's like 172, 171.98. That would be a nice entry. If that holds, then you got a $2 upside to 174. All right, something like this, right? It pulls back right down into this level, pre-market highs, and then look for like the bounce. It'll hold, bounce, pulls back, and see if you can get something like that. All right. I mean, I should have went short this thing yesterday. We had said in the morning that news actually was already a headline news, and they ended up confirming it after hours. So there was this like warning that was given pre-market on the back of that news that came out Wednesday afternoon. I felt bad for anybody that was long Apple, and that's why I've learned with Apple, you have to watch. You'll get sucked in thinking you have a directional move on it, and she flips it and reverses it. So Apple, I'm looking for that test of yesterday's low. I'll get into Baidu. But let me talk about the Qs and the SPY real quick because we have a really nice, we have like these levels are so clean. It's not even funny. Watch for obviously yesterday's low. All right, yesterday's low for a rejection. All right, or we reclaim it. Okay, or we reclaim it. So I want to look for a bounce back into like 446, 446.75. This whole area there. You know, I will watch these lows here at 446, but let's see. So that's where your dip buyers were, up there. And you know what? Maybe even get a run up to 447. So I'm just looking for a bounce back to see if we reject or continue higher. Because here's the name of the game. You have this pivot high here and this prior support right here, like 444. You didn't quite get to it, so that may be the test. Actually, you did. You kind of did. All right, but I wouldn't consider that, in my eyes, I would not consider the tap of that level right there support. Now, I'm sure futures hit it already. Same thing you'll see here. See, my stuff's taken it's sketching out again. So I'll have to I should have restarted it before I started the stream. But it's all good. I think we'll be okay. It's Friday. We have March Madness, by the way, too. So if the markets aren't doing much, I'll be end up watching that. So the SPY, same thing. The levels are pretty damn clear. Oh, so if I didn't give it to you, the Q's 444, 444. And I think, listen, if we get that rejection, I want to see 444 break. I'm just not sure if it's going to right now. You just have to watch the Dow, since it's our leader right now, if it continues to make a new high or not. Look, the Dow and the SPY are caught up again. So is this our shift? Look, I'm saying it now, pre-market. Is this our shift where we start to get that you could see what the rotation, all right? The amount that the Dow has been at, like if there was like a number from 1 to 10, right? The past couple of days the Dow has been at like a 7 or an 8, leading the SPY and the Qs. I would consider it like a 4. We're closing that gap now. A 2, a 4, a 3, right? The gap isn't as much. They're tying up together. All right, look, it's at yesterday's low. Where is the Q? Oh, that's the SPY. I'm sorry. I know I went there. Okay, it is still... Bro, come on, bro. All right, so you can see it's right now, it's at 397. 397.67. All right, right at yesterday's pivot low there. And look, see how the Qs are running, like it's coming up on the Dow, you know, it's coming up on it. It might start taking the lead, so it's like a race. But yeah, the Qs, I'm watching yesterday's low. And then if we break above it, I will watch this pivot high here at 447. That was that support from yesterday morning that ended up breaking, and you turned that into resistance yesterday. All right, that's 447. We have a huge gap, though, I do want you to know about on the Qs. If we end up breaking next week, maybe not today, I haven't looked at the volume, 444, if we end up breaking that, it's already 9 o'clock. I got to hurry up. You got some ways down. You got this little pivot high, but look at, like, it feels like this Fed day, this is like, to me, a wall that separates that from this price action. You can see today, right? You can see how you have resistance here. You pull into it. Really, it's a gap fill if you take pre-market away, and then you run into that support right there from the Fed day's close, that pivot high from Fed day on Wednesday. This is like a wall blocking that price action, in my opinion, and you could find yourself, the next support level would be down there at 438. So you could have a big downside play if you get the catalyst. You need the catalyst, though. All right? So, but let's go to Baidu real quick. So we went to Apple. We said that 174, I think it was. Yes, 174. Look for pullbacks, though. Look for pullbacks to 170, 175, 172. And then you look for the bounce to 174. All right? 172 holds, pullbacks to 172, long 174. It's a $2 move. Take what you can get. All right? Baidu. I think this is the bigger play here. Baidu, you have a little bit of a gap fill there. This is like a little bit of an island reversal there. All right? Baidu. 108. All right, 108. I can use the close. I'm going to put it right. I'm putting it right there, 108. All right, that's a rejection of 108. All right, that's a rejection of 108. You have previous highs up here. You have another from your earnings up here at 113. You have 113. All right, and then I'm gonna do this. This fucking antitrust. This Biden administration's got to go, dude. They gotta go. Like seriously, you're not gonna sit there and tell other people how to run their company. The stupidest shit. This is why we need no more Biden. The only way I would vote Biden is if he changed up the cabinet. This shit's getting ridiculous. 114 if we can get that. Let's go to the daily chart. Yeah, that's kind of too hot. That's too bright. So let's look at the daily chart real quick on Baidu, so we can see the long-term picture. All right, you have some resistance up there at 120. Give it to me at like, I would say the resistance or support and resistance would be like, it's like 115. See, these Chinese companies, their charts are ugly. Right now, it's in a downtrend. It looks like it's trying to put in a lower high. I know it's like 120, like this area right there. 138. I'm sorry, 137, 138. But we need, let's see, let's go here. Flat top resistance up there at 149.75, so 150. Okay. Okay. Sorry, guys. So, I'm not saying that this is where we're headed right now, but that's your resistance zone is up there at 150. What is going on? It's not giving me the level. Oh, my gosh. All right, so see if we can take this thing to 120. All right, that's how I'm going to be watching this. You have the 200-day moving up average up there at 122 as well. So if Baidu can reclaim any of these levels, I doubt you get to 120 today. What I would look for, all right, on Baidu, where are we? 106.38 was the last price. 106.38, 106.38. Okay, so you're coming into a little bit of resistance up here at 109 or 108. All right, 108's a little bit of resistance. I would like to see a support brought in there on this gap fill at 106. Okay. Man, if you see, I would not want it all the way back down there, obviously. 104. Yeah, I want to hold the gap fill. If this is going to be bullish, the 50-day is way too far back. 106.43. Let me do this real quick. I'm going to put my 50-day moving average. I mean, I think we did it. I think if you get a pop up there at 108 and you cannot break through it, then you look for the short. All right, from 108 to like 110, it's like a $2 range. I just want to make this 50-day visible. And then the 100-day, which is up here. Because we pretty much filled that gap for the island reversal. I'm going to watch Baidu and see what it does. And I'm going to let you guys know right now what I think. I got to hurry up, though. I'm going to cover FedEx and stuff. Yeah, 110. If you can't break up above 110, that 100-day moving average, I want to look for a rejection on Baidu. Okay? 100-day and 110 rejection. 108, 110 rejection. If it breaks above and it holds, then that's when we have room for a long, you know, I would expect it eventually to get back up to like 117, like 117.50, 118 eventually, not just one day. So, um, we'll see if she ends up breaking or can get up there. All right. So you guys can see here. So that would be our resistance, right? 112, 112.50. We get pullbacks. You know, I would like a pullback to see. I think 102 is too far. Um, if you can, if she can give me a pullback to like, see, 105, the 50 day. I need 105 in the 50 day long. That's what I need. I need that 50 day to hold. All right, that 50 day at like 105. You have a small resistance level up there, so you already went into the 100 day. Um, you know, this is the 110. Yeah, exactly like we said, 108, 110 rejection. I'm gonna leave that there. And then obviously heavy resistance up there at 117. So let's just see if this thing wants to start walking itself up. You know, it's in a downtrend. I don't know if this is going to be enough news to keep it keep it upright. Look at all that volume we have there on the sell side on Baidu. Once you get up to the 100 day, that 110, look at all that volume from the earnings day. So I would say maybe you can get above earnings because now there's a fundamental catalyst to help this thing out to give it better earnings. But I don't see anybody investing in Chinese companies anytime soon, in my opinion. Maybe they do. I don't know. But who's to say that you got to understand institutional money flow, big money. They want to be able to sleep at night. They don't want to wake up and Xi Jinping just makes up a new law and the CEO of the company comes up missing and now the stock's down 50%. They're not going to they're not going to expose themselves like that, especially when there's a lot of money involved. Why would you do that? All right, Google. Google is the other side to this play. So, I'm watching this level here at the highs. Wanting to see if we go up to fill this gap. You have a gap fill up here. It's at 153. All right, 153 is going to be the gap fill. Let me do this real quick. Yeah, I'm going to keep it there. I'm going to look and see if we can end up breaking out. If we end up breaking out of this previous high, that's your all-time high there. That's the closing high, I should say, roughly. You obviously made a new one, but you guys get my point. From 2020, 2021. All right. So, do we break above and hold 150? Can we get a break above 150? All right. You have a massive gap fill here. What I would look for on Google, it's pretty easy on this name, is that resistance that you're coming into up here now, up at 150, 150. It's like 150.50, okay? Prior resistance, 150.50. If we end up breaking and holding, let me go to a 15-minute chart. All right. I would attempt to look for a long, but I need a long. If I get long this name, it's got to be at like 149. All right, 149 is where I would need the long. Okay. If the overall markets are going to go higher, I mean, this is a mean reversal there on Google. That's a mean reversal. So watch yesterday's high. If the markets are going to go higher, you have to expect Google to go higher. Target's 153. That's your gap fill. It's a $3 move. You know, a perfect trade would be a 149 pullback, get long in front of 149, or even your pre-market pivot high, right? But I think we're past that. Look, she's just gonna go. So pullbacks to 150.25, 150, 149. This pre-market, you guys can see it right there. You get a retest of this level of 149.75, 149.80. Might be able to take the long. You got to watch getting through this level, but I think you're clear, right? I mean, this is strength, guys. You have just flipped it and reversed it, and you have not looked back. That's clear. That's clearly strength that Google's being bought. I know it sounds stupid to say it like that, but let's see what type of volume we have here. Look at the volume coming in, guys, on Google. Look at that pre-market volume. What time is it? 9:15. I gotta hurry up and give you guys my other ideas. Okay, yeah, so we have some nice volume here coming in really early on Google. Let's see here. What else do we have? So AMD coming in to support yesterday. I told you guys watch for the gap down. Literally, I told you guys I felt really strong about a gap down on AMD. What'd you get? Kind of, it's trying to. It's going to be small. And this is the trade that I said, though, right? I said I would like to look for a gap down and a bounce back, okay, and a rejection of the 50-day on AMD. You have some support down here at 175. You guys can see this minor support. So I'll show you guys on an hourly chart. You know, technically, it's still holding the 50-day, technically. But the thing is like, not only... All right, semiconductors have been weak. But AMD, when there is strength with semiconductors, AMD has been the weakest of the weak. All right, for semis. AMD is weak alone. So, you know, if semiconductors for the, you know, there's different kinds of, you know, there's different sectors within semiconductors, but, you know, when the overall semiconductor market's going higher, you know, AMD has lagged, and you saw it yesterday. If you looked at the heat map, you could see yesterday, look, AMD was red. Not very many names in the semiconductor space. Software application, no. ASML, semiconductor equipment, look, all green. All semiconductors, all green, except for STM, still, what is that? ST Microtronics and AMD. Weak. You know, Intel was flat. AMD right now is doing worse than Intel. I mean, not necessarily overall because it's at highs, yes, but again, you held the 50-day. Here, look here at the hourly chart. I got to hurry up. You can see right here support, right? Look back at the pennant that it put in. Support, right? Once broken, it becomes resistance. All right, so you have two acts here, right? You have resistance. Click. Can you guys hear me clicking? It's not clicking. Support, resistance, right? Resistance. Support, resistance, right there, support, all right here. So we're above it, we're pulling into it. It becomes support. You usually will grab some support on the way down to it. You can see it's already done it once again. So I would look for this 50-day, yesterday's low, to act as resistance. You know, it's probably not going to give you a ton of follow through. So watch trying to go get short down here. All right, you do have an increase in volume. I think this thing, you should have been short way back here, honestly. You're because this is starting to like curl itself back to the upside to put in a lower high or extend higher. I don't know. All right, what it's going to do in the future. But she's a bit overdone. Whoever's been shorts made some good money. We'll see what she offers us today. But I would look for some support down where she's at. The question is, do we break above the 50-day or not? And can we hold it? I probably won't be trading AMD. I was short yesterday and I was long AMD yesterday. I made some money on the short side yesterday with AMD. I lost some money on the long side. All right. My gig was yesterday during midday. I'm like, okay, let's see what happens here. My thinking was that Were we going to hold this level here? I was going to know pretty quick. Where are we going to hold? You can see here, right? You guys can see here, pre-market support. It ended up breaking. Support, 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 rallied. Support or resistance, resistance, right? So once we got there, I was like, okay, you know, I should have obviously bought the 50-day, you know, but it was this level too. 181 and 183. I remember it was 182. Okay, 183 was the resistance. So I was looking to see if I could take profits off of that level to even test 183 because that's your resistance. Resistance. Support. Okay, is 183. Maybe we get that shot today if the markets are strong and semiconductors are strong. Like if we look at it, you have to watch NVIDIA. You have to watch semis. NVIDIA's not doing too bad. NVIDIA's actually holding up pretty well. Kinda. All right. I would expect a bounce back on NVIDIA and a rejection up there at 917.50, 920. But if that does not reject and you do for some reason have strength in the Qs, okay, I would look to be long. All right. Goldman Sachs yesterday was a trade of ours. Come on, bro. Don't do this to me again. It's 923. Look at that monster move. So a lot of the look at this thing on a daily chart, guys. Look at that. We gave that out early in the morning. Bang. Look at that. Let's see what the Dow does. I would expect a pullback from Goldman Sachs. These options were crazy, bro. They went like even going through all the strike prices. It only took you a few minutes after we called it out, about 10-15 minutes, and you were at 100%, if not more, depending on the strike, to 200%. And that's a fact, right? That's a fact. On that pullback to VWAP and that bounce back, bro, you did your thing. Depending on how far you were out the money, I think like the 415s, 416s, I looked at a lot of them yesterday. But I was running through them yesterday, and I'm like, damn. They paid nice. They were really nice. So, what else do we have? What do we have on the list? So, financials have been doing really well. Financials have been doing well. Keep that in your mind for next week. Boeing is bumping up against this resistance level. It's going to be an area. What I'm going to do is I'm going to put a box here. You know, I may not trade it. I don't know what I'm going to do today. I'm going to sit back and kind of just like watch. I'll probably be trading Google if I do anything. So it's a gap fill there. Let me do this. I just like to let myself know with lines and dotted lines and stuff that, like, you know, I'll know that that's your gap fill. So, yeah, if you guys have any questions, throw them in the chat. If you guys could, hit the like button, subscribe if you haven't already done so. If Boeing pulls back to 188 and holds and the market's strong, or we get some strength out of the market, then I would look to be long. We have 5 minutes. So, let's see if we have anything here. Gilead announces completion acquisition. Oh, FedEx. FDX. FDX is at all-time highs, guys. You can see some profit taking here. Look for a bounce back and a rejection up there at all-time highs, or a hold of previous highs. So we are right here. This is your look, and we're not holding at all. 290. Wow, 290. Okay. So if we go to a daily chart, you can see that there is, so look, there's a gap fill here, guys. There's a gap fill right here at your previous highs, and that's literally where we stopped. That's literally right where we stopped. There's a lot of resistance at 300. 300 has a lot of resistance on FedEx. Okay. I would look for a pullback. What is that? 280, 279, 280. Where are we now? Yeah, I would look for a bounce back and see if you can short this thing back down to 280. That's my call on FedEx, guys. I would look for a bounce back and a rejection of 300 and short to, what did I say? 280? 280, I think I said. Yeah, 280, guys. 280. Yep, 280. So I think that's our range. We have a $20 range here that we can work with on FedEx, okay? All right. 289. What is that? 290. What I would do is I would look for an entry here up at like 290, 250 to 293. That's what I would be looking for. Is an entry there. All right. 293 entry. 290, 250 for the rejection. That's a nice support level there. Let me go to a 1 minute. Let me make sure I'm not missing something here. All right. Good luck today. If you guys see anything, throw it out in chat. You do have some support down there at 185 as well. Yeah, 285, 286, I guess. Let's put in another dotted line. Oh my God. I never even hit the range, bro. Look. This thing is crazy. Unbelievable. Nike. I appreciate all of you guys. If you guys could hit that like button. I got to get better at doing this. I know I suck. Like, unbelievably. I'm not sure what I got to do to change that. I mean, obviously, I just have to, like, not suck. But, you know, sometimes it's a little hard to not suck. But I thank you guys for being here. I don't think people really understand how good we are here. I think people underlook that. I think they really do. DraftKings has been on a run. Speaking of... Alright, there's the market, guys. Oh, Tesla. Tesla. Shit, how'd I forget? Gotta see if we have some support down here. You put in a nice double bottom. I think this has been a low volume pullback in my opinion. So I would look to be long Tesla. I mean, it's still weak, but... I don't know if there was news or anything with it. I don't understand. Alright, so that's a nice move right into pre-market highs. Look, it's slow again, guys. You gotta be fucking kidding me, bro. You gotta be fucking kidding me, bro. You gotta be fucking kidding me. Excuse my language, I'm sorry. I knew it. I knew I should have restarted this thing. Bang, let's go, baby. Bro, why is this happening? Fucking piece of shit. All right, so guys, let's look for, you know, bro, what is going on, man? Fuck! Come on! Every fucking day this thing is just going fucking berserk. Fuck it. You know what? I don't even give a shit. I really don't even give a shit, man. Don't even give a shit. There's your long. You get a pullback right in this previous high. I'm looking to go long Tesla. This fucking piece of shit, bro. Like, for real? You kidding me, right? Are you for real? Are you for real? You're kidding me, right? You're kidding me, right? Dude, what the fuck? Did you get it? Did you get it? Watch out. It might dip back down a little bit lower, but I don't know. I think you had too much of a gap down there. Bro, this thing's really gonna fuck me, right? Dude, this thing's gonna fuck me, isn't it? I know it is. You're just gonna fuck me. I know you're gonna fuck me. I know. You just can't just speed the fuck up. I know, it's too hard. Too hard to just speed the fuck up. Brand new fucking computer. See, I don't think it's the system. There was nothing wrong before. Let's go. Bastard fuck, bro. Alright, you guys can see here. That could be a nice support level. If it breaks, watch for a rejection there. If it ends... Bro, this is nuts. That level right there, it just broke again. 167. Dude, I'm having a hard fucking time here, bro. This is like same song and dance, right? Every day. I really want to try for a shot up there at 173. I'm watching that pivot low there. It just rejected. Nope, it held it. It held it. All right, let's do it. I'm going for 170, 250, 170. Let's see, what is the liquidity looking like? 14. There's a lot there at I need to hurry up and make my decision. Yeah, it's a lot of resistance here, it feels like. It's just weak. Alright, guys. Wait. Bro. Okay, never mind. God damn it, bro. Alright, so watch the SPY. There's a little bit of resistance here. See if you get that pullback. 165. 165, gang. 165. I'm saying it now. 165. 165. $165. Just watch, because they're gonna run this thing down to where you don't make any money on it. So just be careful. All right, don't buy too far out of the money. Don't buy too far in the money. Like, there's a. I would like to see it hold. I mean, you do have a gap fill coming in down here. They're just gonna hang it out. I can tell. I think it feels like they're just gonna hang this thing, just hang it out right there in this area. No, there's your rejection. So now you're seeing clear weakness. Clear weakness on Tesla. Let's go here. Where is AMD? What's AMD doing? I really wish I could just shut my computer down right now without turning the stream off. So there's your bounce back. Literally, I said this yesterday. Look for a gap down, right? We come in with the gap down. We open up at 177.34. You bounce back to yesterday's close, yesterday's low, 50-day moving average, and you look for the rejection. And you look for the... why is my 15-minute chart doing that? I don't like that. Bro, this stuff should be saved. Alright? This shit should be saved, bro. This stuff should be saved. There's no reason why this stuff should not be saved. Keep price zoomed in. Apply. Okay. Keep it there. Let's go, Tessie. See how they ran it down? Those contracts were around 10 cents, bro. Damn, that sucks. You see that? If you buy too far out, gang. That's crazy. That's crazy, bro. And there's your resistance coming in up there. What is that? 172. All right, see if this holds here at 167.50. They do not want to pay. They don't want to pay anybody. You can already see it this morning. Be careful out there, guys. They don't want to pay nobody. They do not want to pay y'all. Especially if you're trying to trade Tesla. Look, they're just running it up. You're getting a break-even price, and then they're going to run it down. It's garbage. Garbage. I would at least look for next week. Unless you find something that has relative strength. Bro, are you fucking kidding me, dude? Excuse my language. I'm sorry, guys, but this is the second day in a row where I have issues with it lagging, and I can't shut my computer off or I stop the stream. And then have to restart the stream. And like, none of my stuff is saved. Like, I have to keep clicking and moving everything. Like, look, there it goes. Tesla pulling back. So they're not paying. I feel bad for anybody that's trying to be long or short Tesla. They're not paying you. They're not paying you, so don't fall for the trap. Or sell premium. Sell the premium. And then here we go. We're going to bounce it right back up. You can see these rips. Like that rip, you didn't get paid, bro. You went from 7 cents to 10 cents. And if you tried to get long here, you got filled at 8 to 10 cents, and you got break-even price right there. Even if you had a limit order at 11 or 12 cents, what's that going to do for you? Depending on, like, if you had, like, the 175s or the 170s, depending on where the, you know, where you're buying. You know, I could be wrong. But I ideally would like to be at, like, 170. You have a lot of volume and open interest there. And then, like, the 175s have a lot of volume and open interest. That would be your next. You see what I'm saying, gang? See what I mean? It's just doing its own thing right now. That's crazy. So this is a support level I'd like to see it get to. What did we say? 166.50? Yeah, 166.50. Yep. Getting a nice increase in volume there too. Look, and it's dragging that 9 EMA down. So are we pulling back yet? Okay, cool. So we are pulling back. Are the Qs up and under the futures? I mean, I'm sorry. No, give me right here. How about this? All right, so let's see if the Qs can break this level.
COOT, Australian Oilseeds, IPO open now. But maybe worse, because here, at least there was revenues. There's almost no revenues here. I think they brought to the fore the share is at $3.03.
Mobilize selling off. What is going on here with the Qs? Like, what are you doing, bro? A lot of things starting to sell off today. Where's Google? Google was another one we were looking at today. It's gone, guys. Did anybody take that? Told you. I said watch. Watch for this thing to rip and roar. Unreal. All right. Baidu, Apple. I'm just trying to get my stuff going here. All right, Apple pulling back like I thought. Never really gave you the bounce that we were looking for. Okay, so there we go. It's gonna make it. Is it gonna make that support? I thought that this was too far of a pullback, and it gave you signs that it was gonna pull back. Um, maybe you get that 103. Maybe you get another test of that pre-market low and the 50-day. You know, I don't know how Baidu's going to react. It could just do its own thing compared to the Qs and the SPY, in my opinion.
It's incredible how it's not rigged, obviously, but the system is not going to be able to work well. The capital system won't work well
Okay.
with this particular item, in part because there are people who recognize that maybe this could get President Trump out of what's perceived to be a jam for cash.
Exactly. But again, on paper at least, when this thing is trading publicly as DJT, if it maintains the current price.
Wait. Well, I don't understand why they keep saying that man has to pay this shit. He needs to take it back to another court. It's ridiculous. He shouldn't be found guilty for anything. He didn't do anything. He didn't do anything fucking wrong. They coming up with shit. And listen, these are the same people that gonna come after you too. So don't get it twisted. They ain't your friend. I tell you guys that all the time. You seen what they're doing to Apple and stuff. Like, just get them going. Please, I beg y'all. Get these mother flippers going. They talk about competition, this, that, and the third, but then stifle you when you try to bring the competition. So, you see what I mean? You see how Tesla's just hanging out? They're going to run these fucking... They're going to run these premiums dry, gang. So don't get chopped up. Please. Do yourself a favor and don't get chopped up. Find something that's relative strength. Alright, AMD. Just getting slacked. Shellacked. Alright? That's up to you. If you think a 176.30 is worth getting short to 174. A dollar or two. That's your own decision there. If you think that that's a good risk to reward trade.
Shares at 2386 on MRNO.
I don't know what happened there.
COOT, again, that's the IPO just opening. And
I don't know how I missed Google.
Quickly
I mean, I was watching Tesla, but usually I do pretty well on Fridays. I figured Goldman Sachs would have a nice pullback. I gotta get something here today, guys. I gotta eat something, man. I'm telling you. You notice how it didn't save itself right there? You see what I just had to do on that 3-minute chart? I know there ain't nobody fucking watching, man. Fuck nobody. You see how it's just continuously sitting there? It's fucking crazy, bro. Look, Tesla right back. Tesla just ain't moving. They really fucking y'all right now. They trying to. They're trying to screw a lot of people there.
All right, week's top gainers, of course, Micron on the earnings. That was yesterday. You can see the gains there. FedEx we discussed this morning as well. Qualcomm powering ahead to the largest market values in the current stock market, some 630 billion.
All right, so it looks like it's trying to make that area resistance now, or support. We're above the 90 MA, right? We're below VWAP. I want to know since when did it start this? Where when I click on it to backspace and get out of a ticker, when did it start this? Yeah, let's not backspace any of it. Let's continue to write the same. Look, ready? Click. Backspace. Just clicked backspace. Didn't do anything. Oh, I had to hit it a bunch of times. Fucking piece of shit. Google, guys. Google.
Star is just how Doug feels when he uses Workday. Thanks, Rory. I'll show you Rockstar.
Be a finance and HR rockstar. Workday for a changing world.
I would love to know why. I would love to know why.
CEO first on CNBC. The state of the housing market. Are home builders keeping up with demand?
AULT also Alliance announcing final distribution of PMG securities valued at about 2 cents for each share of Alt AI, Alliance rather. That's AULT. Shares were halted ahead of that news. Alpha Uniform Lima Tango.
My name is Oli Shea, and some of my favorite moments throughout my life are watching sports with my dad. Now I work at Comcast as part of the team that created our AI highlights technology, which uses AI to detect the major plays in a sports game, giving millions of fans like my dad and me new ways of catching up on their favorite sport.
Power through your to-do list. And create a space that makes a splash. Right now, save $30 on the FS56 RCE trimmer. Real steel.
Oh wait, shit. At least I thought I had the mic on, but I was saying yes. I seen it. I was yeah. I seen it. Let's look at Coinbase actually. So that's if anybody caught that Google long, good job, great job. Here's Coinbase. Bitcoin was pulling back. You know, I think you should already be in the trade. I feel like 260 should have been your entry, but
All right, we got a short time for a stop trading. What do you got? Chipotle?
You know, I feel like there's an issue going on right now with how much a stock split really means. Watch Chipotle.
look at that.
It went up a huge amount because they announced
Look what they did with Tesla, guys. They just screwed all you mother flippers. They just screwed all y'all. Now they're gonna run it up. Now they're gonna run it up on you. Well, you got the 90 MA right there. You have to break above it. You're not there yet on the 15-minute either.
Yeah, well, you won't, because I'm going to be away next week. But what do you got tonight?
That's why,
Yeah, right. I'm on assignment. I'm going to be on assignment relaxing somewhere. What do you got tonight?
look. They're not going to hold that level. They're just going to stick it right here and give all y'all the middle finger. Look, they're going to give all y'all the middle finger, and they're going to stick Tesla right there and not even move this thing. And not even move it. That's good, bro.
You've had winners all week, Jim. Really great. Just great stuff.
I think that's hilarious. I think that's hilarious. Look at, guys. Look at the volume on Tesla. This is the most volume it's had all week, and it's not moving. That shit ain't ironic, bro. It's not ironic that thing ain't moving, but it's got the most volume it's had all flipping week. Don't play with me. I know that shit is rigged. They definitely are sticking this thing. They just slammed premiums and crushed the shit out of them, and now they're going to let it just dance around. So maybe now's the time to buy it. I don't know, though. Watch out. Your 5-cent option might go to 0. Chances are it won't go to 10 because they don't want you to get paid. So be careful out there. They'll wait to run it up at like 2:30, 3 o'clock. And it'll be like, oh yeah, Tesla 175, 180. That's where it needs to be at. So
helping you discover untapped possibilities and relentlessly working with you to make them real.
man,
Morgan Stanley.
it's an irritable day today for me, as you guys can tell. Because this is the third day in a row. Like yesterday, I didn't have a watch list ready because I had some errands to run. So I didn't really have I didn't have much time yesterday, which is okay. Wednesday, I was a little upset because I missed my entry on the queues. And then on top of all that, dealing with when the market's open, this thing just like my computer just fucking shits the bed. I don't know what the hell's going on with it. So it's like, you know what I mean? This kind of just been building. It's been building. I have been trading shitty, right? Or at least I haven't been doing as well as I haven't been making as much as I should have been. And I'm not okay with that. And I wonder if it's, I'm doing way too much other things. Because it's only me here, and I feel like getting the research in and just doing everything, it might be a little too much. I don't know what I'm gonna do. Let's see here. So Apple's trying to regain. It's not trying to regain. Let me rephrase that. Apple is not gonna do anything today. Just like the overall markets, they probably aren't gonna do anything today. We do have March Madness to look forward to. Look, once again, the market just ain't going to move. Let's go see what we have for next week. There's probably a reason why. Because I think it's pretty insane that we just get the biggest like green light. Like the fact that the Fed just said they're done with balance sheet runoff, and this market doesn't run up another 10-15%. Are you kidding me? Get the fuck out of here. You didn't price that in. You didn't know the Fed was going to stop quantitative tightening or stop the balance sheet runoff, because the last meeting and everything that they've said from then until Wednesday was that they were going to continue with what they were doing. Not we're going to stop balance sheet runoff and this market's just going to sit here and get pinned. Get the fuck out of here. You didn't price that in. I know you didn't. I know the SPY should be at 530. I don't care about the run that we did all summer. The market did not expect the Fed to stop balance sheet runoff. That it did not expect it. Unless they all talk to themselves outside of the market, right? And they go to their little dinners where they talk about what's going on. All right? It wouldn't surprise me if you have fund managers with a ton of retirement accounts and stuff talking to Powell and them telling them, behind closed door what they're doing. It doesn't surprise me if they would do that, right? They can do whatever they want. They are above the law. That's a fact. But I mean, I don't really care if they do or don't. But you can't tell me that the market didn't look. And we have nothing. Okay, we have GDP on Thursday. So we do have GDP. I think this is revisions, though. I would imagine, right? For Q4 revisions. Final. So that should be revisions, I think. Okay, we do have PCE. We have PCE next Friday, though. It could be a slow grind, guys. We'll be prepared. Yeah. And there's a lot of taking profit. Every day you see, let's see, at NVIDIA, if they're going to somehow manage it to 925, I am in to hike it. But sellers. So, semiconductors have been weak. At least the past couple of days that I've been watching them. Oh, wow. You are getting a bounce on NVIDIA. I expected a bounce, but alright, so you recovered that bounce. Now they're going to run it up. Okay. That means Tesla should go down. If the overall markets are going to go higher, then Tesla should go down. Look at that. Are you kidding me, bro? You're fucking kidding me. Bro. Tesla's a few dollars away from being in the money, and these contracts are still. They just completely shit on them. Are you kidding me? You're kidding me, right? You gotta be kidding me. There's no way. And I knew that this was, so I'm not surprised. Because when we wicked all the way up here at 169.50, they just went, the contracts went right back to, whatchamacallit, to where they were. They went back to break even. But with a delta of 3, for every dollar, you should be getting 100%. So give me that 169.50, 170 break. Let's see what happens there. Then they should go from 5 to 10. And then from 170 to 171, they should even go higher. That delta should be higher. And start to, we'll see, though. They probably won't. They're going to pull it back. We're going to get a pullback to 167.97. Then they're going to bring it up. Then they'll flatten it out a little bit. It's just a bunch of bullshit, bro. It really is. But I forget what I was getting at. But yeah, like you say, with NVIDIA, that's what's up, bro. And AMD is down there at support. So we said this level was support. Watch for that to be support. Let's see what Baidu is doing. And like I said, I thought that 102 was too far of a pullback. Even 105. So it doesn't mean anything. They selling that news off. They're selling it off. Well, Apple's bouncing. Apple's bouncing. What's Microsoft doing? I forgot about Microsoft. We've been watching Microsoft. It's not doing anything. It's just doing the normal shake and bake. This market's getting real boring, guys. Gonna have to start sizing up and getting small 15 quarter moves again. What do I have written here? Do you guys see anything with relative strength or relative weakness? Anything with nice volume? Alright, so KRE's breaking down. Energy's pulling back. Let's see here.
continuing to proactively realign our
Yeah, I seen Google was really the one, and I was watching Tesla.
What's happening with global trade?
In my opinion, and we identified it pre-market. If you saw the volume pre-market, I think Google's where it's at, bro.
what we're basically
Coming up to that all-time high
to your point, cost cutting.
at 153.
The driver, yeah.
The stock is
It's a really nice move.
but not as much as it had been very early going. It looked to be up well into the sort of low teens.
Yep, Nvidia's got some nice volume too.
Reflection about
Oh shit, Coinbase. Let me write this down so I don't forget.
Since we're on a global theme,
Fuck.
that I should leave you with, that everyone's talking about today,
NKG and NKJ Biotech shares moving to the
All right, let's see here. Um,
company will be presenting
letting it drift lower,
on
and
Monday
it really has so much so that state banks
at
had to
the
step
TAL
in overnight
2024
to
Global
defend it because they worry
Conference.
about capital flows when it
That
gets too
is
weak.
November
It's
kilo.
also a reflection
I guess
of
Coinbase is gonna bounce here or what? What are you gonna do? Gonna bounce?
the scope for easing more from the People's Bank of China, the central bank. There were hints overnight from an official that there's more to do on that front. So when it comes to global easing, it's who goes first and who has the scope to do more. And that's why the dollar's been firmer, because the U.S. data has been really strong. So maybe the Fed can't do that much on the cutting front. S&P, it's been strong, coming off its 20th record high of the year. The Dow getting closer to 40,000. Dom Chu tracking the stocks that are getting us closer to that milestone. Dom, good morning.
So Sarah, David, an interesting point there, vis-a-vis all of this, the idea that some of these more blue chip value plays are actually underperforming but still trying to play catch up. If you look at a longer term chart, a 1-year chart of the Dow, since the October lows that we saw, it's been
One person I haven't seen is Carl Cantanilla. I think he got a little carried away.
7,000
I knew it wasn't me,
again moving to the high to the upside there.
unless he's on vacation. That's a nice double top there on Coinbase. We'll see if we can get the short here on Coinbase.
The Dow Jones Industrial Average, it's not necessarily market cap that matter here. It's the higher stock price.
Fucking Tesla.
Three names, which have been
Excuse my language again. I'm sorry for cussing. I'm gonna be cussing this morning because of that trade.
price mark. Over that span,
All right, you got short Nvidia on a day where there's a lot of volume and strength. Can I ask you a question, Anmal?
cyclical side of things,
Listen, your trade might work out. Okay, you got some nice volume there.
it's important because within
All right, you got some nice volume there.
is roughly a 7% weighting, price weighted. Caterpillar's about a 6% weighting, and Salesforce is
I mean, you got room down to 920.50.
stocks that are up
Um,
digits in that span. As for what are the other ones to really keep
be careful, bro.
the biggest detractors during that
Let's see. What's the volume? Yeah, you don't. Never mind. That's not a lot of volume. I thought for a second Nvidia had like had a lot of volume. This, that, the third. But no, I wouldn't. That's cool. I wouldn't mind it either. I'm looking at. See, Coinbase's volume is low.
Amazon, which was at
The volume's really low right now.
but of course over the last 6 months it's up 38%. So its impact, if that momentum continues, could have significant bearing on the Dow going forward, especially since February. But Apple has been the real underperformer, David, of course, down about 2% over the last 6 months.
Okay, there it is. I was like, why do I not have sound? All right, FedEx is trying to regain 286. I'm wondering if it's going to try and man, that's a VWAP rejection.
just been talking about now we're more than 20% from the lows of last October, and the much more important S&P up 25%. How about that Nasdaq, huh? Up 30%. So of course, one question you might have is the market.
Yeah, see if FedEx can regain VWAP and get a bounce to like 290.
See as a S&P target of 5,200. So what do you do when your target's hit, John? Do you say that's enough, or do you just raise your target?
Well, at this point, David, I can't quite tell you what we're going to do with it, but it is under review. When we put it in December, it was
That would be awesome to get like that's a $10 move on FedEx.
and people thought we were nuts. We were looking for about 13%
296.65.
in December when we initiated that target.
1 minute is below VWAP, and then the 3 minute with no pre-market volume is above it. So
Be interesting to see where we
it's up to you guys to decide what you want to do there.
are the
All right, Tesla going higher, not making any money. That's fucking garbage, bro. That's such garbage.
Thing has been that earnings and revenue growth have been as surprisingly positive as they have been, which has caused a lot of bears to capitulate. Probably our biggest worry now is that so many bears have capitulated this year.
That's unbelievable, guys. You see how it went from 3 to 4 cents to 5 to 6? Like, that's it? That's it? That's crazy, bro. Don't get played out there, guys. Don't get played. Don't get yourself played. It's important. What's up, Wiz? Good morning, buddy. Yeah, they are not trying to pay your ass. I'm telling you right now. They are not trying to pay anybody today. I might have to get some more coffee or something. Yeah. Well, you got a trade on your hands there, buddy. Wait. NVDA? Hold on. Got short on the NVIDIA chasing 50-day moving average. Did you get long or did you get short? Long would be to the upside, short would be to the downside. I know you know. You're changing the color. And here is AMD just sitting at lows. Piece of junk.
We were looking for 5,200 and looking for earnings around 240. It now looks like all that is likely to be.
Oh, I don't have my charger over here.
Anything can happen now. I mean, I think the most recent lesson.
Man, I gotta find something for real, guys. Let's look and see what MU is doing. MU's pulling back. Trying to. Let me go to the heat map and see what I can find. See what's moving. No. Heat map. Should be over there. Okay, so Google is your winner. Google is your winner. Bro, 6 to 7 cents? Are you kidding me, bro? Look at Boeing. Boeing's moving. I literally have a Tesla call, and I don't give a shit if it goes to 0. I am not selling it. I am not selling it. I am not selling it. It's a really small position. Oh shit, Boeing's pulling back now. All right. So that's condescending looking. PDD. Dude, PDD has been going back and forth. I don't know if anybody noticed, but Pinduoduo has just been going crazy to the up and downside. So here is my thing, all right? Tesla is down 1.8%. For it to go positive, that's where? 173. And then for it to go green like 1% or flat, like, come on. Are you just going to stay red? I mean, I don't care. You do what you want, Tesla. But I'm not selling it. Because if I can get up to 173, yesterday's close, yesterday's low. It's going to get up into that range, and it's going to get stuck right here between 171 and 173. Watch.
Justice Department's lawsuit against Apple means for the company, its investors, and the overall landscape in big technology. We're going to speak with Connecticut's attorney.
I can't believe that, bro. I feel like they make up their own prices when they do this stuff. I can't believe that. I really can't. They threw your shit right in the trash, bro. They really scam the shit out of people here. That's crazy. I think that's worse than some of those trading groups. You got scammed so bad, it was even worse than some of the trading groups. And next time you guys go to like your trading groups and stuff, ask them what they are personally up or down on the year. Don't matter about money or whatever. What are you percentage money wise? Whatever you want to say. What are you up or down on the year? I mean, it's real easy. You know what I mean? You got a couple $1,000,000. You want to throw a few 100,000, sit and wait for your setup. Bang, get a big play going. Get your blood pumping for like a few hours, and you done for the year. Could be. You know, pay your little taxes. You could do better than most, and have your little side hustles. All right, what's TLT doing? You guys notice TLT has been, or at least on the Fed day, was pulling back. All right, so it's starting to bounce. What's GLD doing today? I'm so upset I never took that GLD. I could have made so much money this week. I did not listen to myself, and I'm not doing that anymore. Now, the next time my mind, and I'm on here, and y'all see me doing this, oh, look, we got the pullback, though. See, now I'm like, oh, shit, yeah. See, this is what we need. Like, you see how it breaks out, and it's just, like, ripping and mooring? Like, it's very hard to get that again with no catalyst. Your catalyst might be PCE, but I'm not sure what the catalyst is to take you back up. Because you got to understand, this is a huge move, guys. 199 to 205. That's a $6 move in a day, bro. It doesn't move but like $1. 75 cents to $1. Normally. So you get a $6 move on GLD, man. That's making your year, your month. You can make a lot of money on it. You just got to strike when the iron's hot. And I was almost there. Yo, I literally sat here and went through all the options chains. Like, for different weeks. Just never pulled the trigger. I should have put it on. It very easily could have went the other way if Powell was hawkish. But I didn't, you know, his job, it's illegal for him to not necessarily send this economy down in the tubes in the toilet, but, you know, when there's no real reason to do that, you know, it's not a good look. I just didn't expect him to come out fully hawkish. Like, they've done what they had to do. They don't care about where the markets are, where they aren't. Which is weird because these are asset prices. This is market cap, right? These are prices of companies. You know, once they get inflated, there's a trend there. What time is it? It's 10 o'clock. Oh, damn, it's only 10 o'clock? Wow. Okay. That's weird. That was the slowest half hour of my life. That's crazy. Wow. It's only been a half hour? Oh no, it's been an hour. It's 10:20. Wow. Okay. I should look at Lululemon too. All right, Lululemon is down, guys. It's down 17%. Fuck. I mean, I can get up on it too if you want. Fuck it. I'll get on it with you guys. You don't want me on it because the thing's going to reverse. I promise you. If I touch this fucking thing, you're going to lose money. I promise. So let me not do that to you. I'm not going to do that to you. You just enjoy your win. You know, if you're long. I don't know if you're long or short. I'm not sure what you are. But, you know, right now I'm not seeing anything. Like, I would like to take a short on coin, but look what it's doing. It's not doing anything either. Unless that's your spot right there. Unless that's... See, it's not. It's not moving. Fucking assholes, yo. These... Fucking dickhead-ass market makers, bro. They're just shoving all this shit right back in your face. And they're not paying anybody. Oh, you said short. I didn't know what you meant. You said got short on the NVDA, chasing the 50-day moving average. Oh, so you're saying they're going to somehow... Oh, wait, hold on. My stuff isn't live. Wow, are you serious? Hold on, let me make sure the chat's live. Here we go. This one is. This one is. There we go. And look, I typed in long. Look, long has a daily chart though. That's funny. Damn. Look at that. That's crazy, bro. Why is it not popping up? Oh no, that's Coinbase. I can tell you right now it's Coinbase. I might have to just look at the SPY.
BACK, more highs now, $2.66.
More than offsetting
Well, surely you will.
as we shift our product portfolio toward newness and innovation. This also continues to reflect the subdued macro outlook around the world.
That's funny. I am going to like do like meditation or something, because I feel like, you know, I could have had a good week again, like the Qs for instance, right? I wanted to get long the Qs for Friday, and like it was hard for me because when I went to buy it, they were 90 cents. We got this pop, just bang, it pops. It's $1. I'm like, okay. Then $1.10. Then $1.20. Right? $1.30. $1.40. So when it pulls back in, I'm like, damn, like, can I get like $1? It's hard for me to buy something like 10, 15 cents higher, even if I think it's going to go higher. It's hard for me to bring my price up like 20. That's a 20% increase on the price. You know what I'm saying? That's a lot. That's a lot. I mean, 20% on 10 grand, guys, is $2,000. Like, that's a little, you know, that it's not that it would make me emotional, but it makes me a little, I don't sit comfortable in the trade. You know what I mean? I'm not sitting comfortable. At least maybe I could be if it's giving me the follow through, depending on what the stock does. But that's why for me, it's important that I get my entries right. And that's why I'm a stickler for, like, if I don't get it, I don't get it. Because I know, you know, my mind is going to say, bro, these things were 90 cents. Is it going to run back to 90 cents and then you're down 20%? And now you got to see the thing with buying options. Because look, if you ask me, do I sell options? Yeah, if the VIX is at 20 or 30, hell yeah, why wouldn't I? Right now, premium is not paying you. It's not. You got to go with the market. You want to get, like, on a day like today, I said it this morning. I said, yo, if you're a premium seller, go sell Tesla calls and puts. They are scratching the shit out of those contracts. Look, the stock's going higher and they're 4 or 5 cents. The stock is moving and the price is not moving with it. Right? You know, if you want to risk, if that's worth it to you, if you're okay risking that, in my eyes, I would never do that. I think it's fucking stupid. You're not making anything. The risk to reward is way too much. You're going backwards. You're going 3 to 1, 5 to 1. Right? You're flipping it around and going 1 to 5, 1 to 8. 1 to 4. Like, you're risking way too much. The premium has to be there for me to be a seller. You can go do individual stocks and stuff like that, but I just, it's not in my best interest right now, I don't think. My best interest right now is to take like 20 minutes, go ahead and meditate and see if I can't like dumb shit down for myself, because I missed some opportunities this week, especially Wednesday. Again, Thursday, I ran some errands in the morning, and I didn't have a watch list yesterday. The market didn't do anything anyway. You know, and just get this shit back on track. Get this shit back on track. So you're getting your pullback off of that level. We said we would have a little bit of resistance up there on Google, so that was a nice call out this morning, because we noticed a relative strength. And this rip right off of that pre-market low All right, there's a lot of volume with it, just like Goldman Sachs yesterday. All right, we look at that, and the volume, the pre-market was insane. So there was a clue there. Hey, we need to be looking at Google. Chances are, you have some institutions buying, and I didn't take that. I didn't take that. Whatchamacallit. For some reason, I was hoping. I saw a little bit of decent volume on Tesla, and I was hoping I could be able to get that gap fill. But little did I know, they're going to sit here and the market makers are running it up on premium buyers. They are crushing the shit out of this premium. I would imagine it don't matter what strike you got. You're getting screwed right now. Coinbase, I'd like to take a short. FedEx. Look, that's not paying you either. FedEx is like just sitting sideways. Boys in the days. Nike. Eli Lilly. Getting a bounce back. Baba, Baidu. If I was 90 cents away from hitting the stop loss. What are you hitting the stop loss on? On NVIDIA? Bro, this should be an entry right there. That would be my stop loss below 924, I think. Yeah, 924.
Dollar was strong this week, so maybe Bitcoin went lower on that, although that correlation is not perfect.
Yeah.
Yeah,
I think
gold did a lot.
I think it might be done though. I think you might if you have profit, bro, I would take it. I would. I mean, we'll see. I just don't know how much continuation you're going to get. It could. You could just continue. You could. I just think. I just don't think you have enough volume here. Like, look what you had yesterday. You had damn near, you had about 1.4 million shares traded off that opening candle. You have the consistency today. It's, you got some decent volume, but yeah, that's it. I mean, so if you break 925, you got, that's crazy. $5 sounds like nothing on NVIDIA.
YCBD getting a pop here to the high. Thank you, Charlie Bravo Delta.
All right, man. Come on. Come on, gang. Come on, gang. Let's do this. There's just nothing, unless you guys seen it. I don't see anything that's given like clear follow through. Maybe I need to look at the news again.
For decades, venture capital has arguably been one of the highest performing investments. But for most investors, it was out of reach.
It's from merging with Trump Media and Technology Group. Oh shit. Look at DWAC, guys. All right, DWAC. Did it? Hold on. I was gonna say, is this thing halted? No, time of sales is still going, and it's green. So that's the 50-day moving average there. If we break it, you could see DWAC pulling back a little bit further. I would say $38, 37.75. It looks like you have a nice little support down here by the gap fill at $36. Part of me wants to short it, guys. Part of me wants to get short this thing. Want to bounce back to yesterday's that pivot area right here at 42.25. 42.92, 43. See if we can get a 43 entry short. Let's see if we can get that. Coin. So coin is falling, but you guys can see here it's not moving. Every little bit of down move it has, it bounces right back up. That's going to kill your premium, especially if you're in dailies. All right, especially if you're in dailies. What is this? 78. 78, 78, 78. Let's see if it just falls out of bed right here.
Join the millions of people taking back their privacy by downloading DuckDuckGo on all your devices today.
Spotify strong. DKNG pulling back. So there's a lot of things pulling back now, guys. IWM pulling back. The Qs I would expect to start pulling back. The Dow. It's not the Dow. Alright, look at the Dow pulling back. Technology is holding on. Alright, I told you guys this morning, and I said it in the mic. I said, yo. What is it? Check mic, check mic. I'm telling y'all right now, watch for divergence. Watch for rotation out of Dow into tech. I literally said that. And it looks like you're getting that. I went through it. CrowdStrike getting sold off. Damn, bro. It's all at the levels.
Russia added the LGBT movement to a list of extremists.
LGBTQ. Y'all are extremists. Oh, snap. Putin. What a... Some of them are weird extremists. You're right. You're right about that. But, you know, just because somebody gay or, you know, let them live, bro. That's so funny. That's so funny. Alright, CRM probably going down. I feel like we're going to start getting our pullback here. I don't know if I should try to enter something long. Look, why are you doing this now? You guys see how I saved my stuff already and now it's mixing up? Like the 1 minute is doing okay. It's messing up on me. I don't know what's going on. 15 minutes still good. Like, come on, bro. CRM.
If you ask them whether they want to pay less for their iPhone, the answer will be yes. If you ask developers if they want to pay less to reach...
Oh shit! Roku had a nice short setup today. Look, I knew it. Damn it! I forgot about it. It's already there. 62 was your level. I don't think I covered this in the watch list. I did look at it this morning, but I wasn't really talking about it because there wasn't anybody here. Look at that, right? Once you got the break of 63.50, you have a nice short opportunity. This fucking thing. 63. Right? That's a nice little move. Maybe you can get it. Maybe you can take it back down here. You might get like 62.50. 62.50, yeah. Yep, right there. That's crazy, bro. That's crazy. I mean, you should be able to get it, bring it back down to like 62, 62.50 if you come on now. And guys, I do apologize it being a frustrating morning. I thought I was over this lag effect we have here, but apparently we're not. I'm gonna pull up the SPY and we'll see if we can get something going here. Yeah, it's ridiculous what this DOJ is doing. Please get Biden and the administration out of there. More importantly, the cabinet. Like, for real, for real. Get them the flip out of there. It doesn't matter. Even if they are doing a monopoly, it don't matter. It don't matter. It's their product. They remember? Just like Google, TikTok, Meta, they can do what they want with your information. You agree to it? Well, guess what? Apple should be able to do what they want with their product. And if people can't afford it anymore, guess what? That's on Apple, not me. Not you.
Yeah, because
Maybe they don't sell as many.
That goes along with it, and it doesn't work well with a digital wallet from somewhere else. Yeah, because again, they have innovated to the point where people like the product.
Look, I love Apple products, and we're an Apple family, and there's nothing wrong with great products. What is wrong is using your monopoly power, the sheer force and weight of a $2.5 trillion market cap company, to stop people from switching, to create a competitive moat around consumers, right? To stop developers from getting access to your application program.
That's weird. I don't see Apple grabbing somebody by the arm and saying, "Stop it! You can't do this." Like, come on, bro. That's just you're not making a good case here.
Communicate with an Android user. Those texts come up as green bubbles.
Yeah, they should.
Videos are grainy. There's no
They should.
encryption.
You're damn right.
Messaging isn't as reliable. Those are real impediments, competitive impediments designed to maintain Apple's monopoly.
What do you
No,
want to have?
that's the
see them
stupidest
do
shit I ever
to remedy
heard.
this?
I want to see Apple change its corporate strategy from trying to stop competitors and trying to stop developers from trying to open up the ecosystem, and trying to keep users and trying to stop users from
William
having choice
Tong?
in the marketplace.
Fucking
Stop that corporate
dumbass.
strategy.
Excuse my
Stop
language.
using your huge
Fucking
weight and
idiot.
competitive
On the phone, you're
I would
focused on
like to
hardware,
see them be
it's not-
green.
It's the whole ecosystem.
I would
because
like
it
to see the
depends on
Googles be
phones,
green.
Depend on iOS, and really all of us depend on this for lives. We can't live without it.
Well, it's going to be years until we have the answer here.
Well, that depends on Apple. You know, if Apple wants to come to the
You
table.
really think they would conceivably settle? You just pointed it out. It's actually $2.6 trillion. They make over $100 billion a year. They can spend. They're one of the few companies that can truly compete with the U.S. government in terms of resources.
Yeah,
They
I
spend endlessly on their case.
Sure. I mean, I was on this show talking about our case against Google and the ad tech case. We've sued Meta.
Yeah, this
taken
is-
on Amazon, and we settled.
Let's
massive
see if,
litigation with,
Why
the
isn't
market
William
makers,
getting so mad at
industry.
at
We can move
the market
the
makers on Tesla right now
when Apple's
with them
ready to come to
stuffing
the
this
table
thing
and
right
talk,
down here,
we're
knowing
ready to
damn
talk.
well
You don't worry
they're gonna
about
wait
the
until the end of the
chilling
day.
effect
You're just gonna get
that
this
these kind of
massive
actions
pop
can have on
right up to
innovation
like
and any great
172,
American
173.
companies like Apple
Guarantee
and
it.
Google
I guarantee
that Europe
it.
would kill for, but their regulatory environment is a lot worse than ours.
I'm not worried about it at all because we've seen this movie before. You know, more than 20 years ago, we went after Microsoft, the Department of Justice, and 19 states because we had to open up that ecosystem, the Windows, Microsoft OS.
Let's see what we
and at
have
that
here.
time, internet
Let's see what
browser
we.
ecosystem. And if you remember at that
Come
time,
on.
Apple was on the brink, right, of going out of business. If we had not taken action against Microsoft a generation ago, Apple might not still be here, and there probably wouldn't be a Google and there wouldn't be a Facebook.
Yeah, it's been interesting. To
Oh,
see
I doubt
Cantor
that
yourself
because
draw that
Google
sort of
was
power or that
was when
line
I was in an
between
elementary
previously the
class.
innovation
In
that
elementary
occurred as a
school, we were
result
using
of Apple.
Google.
That said, you don't feel like you're penalizing
When
these
it first
companies for
came
simply
out.
being so successful.
No, we're not. You know, what we're doing is making sure that consumers have a choice. That if you want to use a different digital wallet and tap to pay, that you don't have to use Apple's wallet, right? If you want to do cloud, if you want to use the cloud for gaming, for example, that you don't have to buy a $1,600
I.N.O.
device, that you can
But it's
access.
$1,600 because they would say that the capabilities and the technical factors in there are far superior and,
And
they're
I would
more
say,
expensive.
and I would say that their margin on phones is double the industry average. Ask their competitors.
People are willing to pay
It doesn't matter.
Well, they're willing to.
Right, it doesn't matter what their margins are. Who the fuck are you,
The
bro?
whole idea of capitalism.
Let them make their money.
But it's against the law to use your market power.
No, it
and
ain't.
your monopoly
Shut the
power
fuck
to
up.
maintain your monopoly, and
Excuse
it's
my
against the
language.
law to build artificial barriers to keep developers out, to shut down and hurt competitors, and to restrict consumer choice. That's against the law. There's nothing wrong with
Restrict
selling
consumer
products. There's
choice.
nothing wrong with
You
innovation.
just
we love
try-
our products. We love innovation. You just can't step over the line, as we know that Apple is, and as part of your corporate strategy.
Oh my
go out
God.
and kill your competition
What is
and
going
stop
on?
consumers from having the choice they should have.
All right, Attorney General Tong, we probably will be able to discuss this for years to come, perhaps, unless there's an unexpected
you'll have me
settlement.
back.
We will certainly do so. Thank you.
Thank you so much.
Well, Apple shares now well into correction territory, which means they're down 10% from recent highs. But our next guest does not think the DOJ's lawsuit
know. I
changes
gotta
the bull case
fucking-
for the stock, despite the headline risk. Dan Ives, Wedbush Securities Managing Director, joins us now. He's got an outperform rating on the stock, $250 price target. Dan, why are you not worried about what your lawyers and regulators? And that
First of all, he does a great
be painful for a
in
company.
Connecticut, and I think they raise great points. Our whole point is the business model for Apple, we believe, is defendable.
Let's see here. I want to
And
see
I
if we
think
can
as they
hold
go
this
through
area,
this, we do not
104.05.
see the services as at risk.
You
And
can
I
watch
think
this
right now
level,
it's
guys, on
almost like the
Moderna,
stock
but
is worried that they're
I
gonna
would
have
watch
to,
if it
from a
breaks, because it looks like
commission
you're putting in a
perspective,
lower
they're gonna
high there.
change their business model. They've defended this before, and we've talked about scenario analysis. I'm not saying that they're not gonna come out
103.90,
clean
104,
straight.
okay?
But I believe what's baked in here right now is $20, $30 of, in my opinion, of an overhead.
But at the very least, people say it's going to be a big distraction. And to David's point, it's going to take a lot of time, a lot of effort, a lot of meetings with
Let's
law,
go. Hold that
lawyers,
level,
and
Tesla.
regulators.
Hold that level.
Ultimately could be painful for a company, couldn't it?
Yeah, I think it could be painful, and no doubt, hand-holding investors through this yesterday, there's obviously a lot of agita. But if you go back to Microsoft when I covered them back in the 90s, I think the biggest mistake they made was ultimately being distracted, not being aggressive. And I think Gates would say that's probably one of their biggest regrets. When you look at Apple, I think they're going to double down. They're going to introduce AI at WWDC in June. We talk about that. They're not, in my opinion, going to back away. And I view this as more, bark will ultimately be worse than bite. But at one point, they will have to get to a point where they either settle from a fine or ultimately go down some path, business model tweaks, but they will defend this move.
Yeah, I mean, and technology
Bro.
changes so quickly. That's the other part of it. It's hard to really anticipate what the world's going to be like if and when that day comes. Speaking of which, though, investors continue to look for a catalyst.
Sorry, I just, like, I
Move the
can't
stock,
stand when it does
once again
this.
higher.
Alright, so look, we're getting another rejection there. Like, I'm scared to put anything on, because nothing is getting paid.
Chatbot being used, perhaps,
Nothing's
as
paying
one of the
today.
AI engines on the
And it
phone.
sucks,
Where
but it
are
is
you
what
in
it
terms of how
is.
you're thinking about what they're going to tell us
Like,
come June?
Well, I think that's a smart strategy because that's already a fully built product. And obviously validation for Google and Gemini, but I do believe Apple is a dual path in terms of the App Store that we view is really going to be an AI App Store, a subscription-based
that black-
model. They will have their own
why is there a
LLMs
black
built
screen
in.
thing on the side?
But when you look what Google's built, that's
I don't
smart
understand
right now,
what
to
that
partner
is.
with them. And I think when you look at going forward, OpenAI potentially could have been in there as well. This is not the time for them to look on the outside.
Yeah, what
looking.
is
It's time
that,
for them to
bro?
aggressively double down.
Fucking
And I think the
OBS. You
AI
gotta be kidding me,
strategy,
right?
Units starting to, I believe, we start to get back to growth in China. Cooks in China this week. That's not coincidental. I think that's another sort of showing we are not leaving China. We're doubling down.
The AI moving to the edge, moving to the device. That's gonna motivate people to go out and buy the next iteration of the iPhone.
Yeah, what the hell was that
270
about?
million iPhone
You
users
see what
out
I
in
mean,
about
guys?
4+
This is why I
years.
think it's
That right now is my
not my
focus
camera,
fundamental.
but it's OBS.
Clearly, what we saw yesterday with the lawsuit is an overhang.
All right, thanks, Dan. Dan Knives, good to get your take on all of this. Up next,
Right,
top 10 picks for your portfolio. Stay
I
with
don't
us.
I feel like the light does cut off, but I feel like it's OBS that's cutting the camera off. Alright, so you have the S&P starting to pull themselves back now. Tesla, you just got scammed. Alright, you got scammed. Just face it. The stock went higher and your options just lost value. In that case, I would agree with you that there was a little bit of manipulation there. Let's see. They just pinned the hell out of it on an increase in volume. But anyway, I gotta get something to snack on real quick, gang. Let's I think I would much rather. Here goes the SPY. Whoa. I was gonna say. So the Qs are already down to that level there. Wait. The level on the Qs would be... See, these setups are so different. Okay, so the SPY... Yeah, the SPY has so much room to go down. Alright. We can try it, but I think the Qs are going to hold us up. That's the set. So here's the tricky part to this. The Qs might hold us up. That looks so far, doesn't it? But it's only $1 or $2. That's hilarious. My shit is lagging so bad, bro. What the hell? Look, we have even less volume today than we did yesterday. Oh my god. Be careful out there, guys. I'm not trading today. I'm done. I mean, I'm going to keep the live stream up, but the volume is awful today. For real, for real. The volume is awful. It's probably because of March Madness.
Incredible. Our next guest helps manage over $20 billion in technology-related stocks for Fidelity. Joining us now, Fidelity Investment Tech Portfolio Manager Adam Benjamin. Good to have you on, Adam. You've been in a nice space lately. The Fidelity Select Semiconductor portfolio, I would think, has benefited from, what, a 28% weighting in NVDA. But it's always, what are you going to do for me now? So we heard from Micron this week. Obviously, we've heard from Jensen Huang a lot. You know, give me your take overall in terms of where things stand, particularly and, of course, because of the advances when it comes to generative AI.
Sure. Thanks, Dave, and Sarah. Thanks for having me on. And as you point out, that's how I think about things. It's all about going forward. It's from here in terms of our portfolios and how we're thinking about sizing, positioning, and relative risk reward in the names of those portfolios. So, you know, as it relates to, you know, semiconductors in general, you know, you talked a lot about generative AI. It's got a lot of focus. Everybody knows about it. GTC was a big event this week. But there's a lot more to semiconductors right now than just generative AI, right? You've got the cyclical dynamic that's been massive due to COVID. You had, you know, the shortages and then the oversupply, and now we're kind of coming through that. And then you add in this whole geopolitical over. Semiconductors, probably the most interesting space you've seen in 20 plus years in terms of people thinking about domestic supply, how to, you know, make sure you have assurance of supply across all geographies, and different dynamics going on across all these other end markets, right? From PCs to autos to smartphones. And so I do think overall AI will have a big overlay. We're seeing it, you know, dramatically in the cloud and data center space and the infrastructure that's going in there to support a lot of the training of these models and inference over time. But you're going to see a reimagination of all these end markets, all these end applications, from PCs, smartphones, and even, you know, things like, you know, auto, as well as your microwave. In the sense that to adopt AI, you're going to need more computing power. You're going to need memory, more power management. So it changes, you know, the design of all these applications.
Yeah, and that reimagination that you talk about, I mean, sense as to what they can expect. I know it's not tomorrow or even the next day, but it's, you know, it's going to be here soon.
Yeah, no, I think that's the way to think about it. This AI problem of all these tech trends I've been following, this one is really hard. So it's going to take. This is not going to be a straight line. There's going to be bumps along the way. What I would say to people is, you know, think about this technology and innovation and the challenges associated with it, that they need to be patient. But you're starting to see certain applications. Obviously, Microsoft's Copilot, a couple other software productivity tools are being rolled out. Clearly, there's a lot of conversation about AI on the edge or doing it locally with a PC or smartphone, I think that's going to take time. So overall, I think people need to be patient with this trend, but it's as I like to overall is probably underhyped as a technology. Some of the stocks may be overhyped or anticipating some of this trends maybe a little bit too early, and the fundamental benefit may take longer than people think.
But I'm just wondering how you pick the winners and losers. Obviously, you like NVIDIA, but I don't see in the top holdings an AMD, for instance. And I see a Microsoft and an Apple in the technology fund, but not an Alphabet or a Meta, which are thought to be AI. How do you choose?
Yeah, so think about it this way, right? I mean, if you look at last year, the AI basket, if you look at broadly diversified funds, it's loosely named. It's about 50+% of names have some AI exposure or put in that basket, and a lot of stocks worked. We've been looking at AI probably since 2017-18. We have the benefit of looking at private companies and seeing this and following NVIDIA and where they stand as not just a chip company. And clearly this is a full stack software system networking solution. And so, that gave us a good insight into where this is going. But what I would say is, going forward, we're starting to see a separation, right? We're starting to see companies that were perceived to be. Now you're seeing, that separation in 2024. Intel, for an example, was viewed as potentially a winner. They have Gaudi, but now, the stock after being up 100% last year, down 15% this year. People are starting to differentiate, who are winners and losers. And that's really our job, right? We're trying to be early. As David indicated, we run, pretty large asset base. So we have to be early to these trends. We were early, and we continue to track, the evolution of AI. And I think there'll be several phases to this that we need to be thinking about.
All right. Well, we look forward to having that conversation with you over time, and hopefully you'll join us again, Adam. Got to stop there for now. Thank you, though.
Thanks for having me.
Well, we'll be right back.
Sorry, y'all. I just wanted to grab a little bite to eat. Man, this volume is... Dude, I didn't even click anything. I mean, worst case, I might have to just turn this stream off and redo everything, because you can see here, if you guys notice, looks like it's trying to roll over. You see how they're so sure to not run this thing, just make it fall out of bed. Like, if there's anybody here that's trading, you would look at this and say, bro, yeah, 518, we're going down to Fed Day. Let me just sell the shit out of this shit right now. But they're not. And you would see a limit order, you would just see a drop. Boom, 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 boom. Right? You're not seeing it for a reason. They don't want you to get paid, bro. I'm telling you guys. But you could see what started, right? Look at this. Boom, 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 boom. Like, it started yesterday afternoon. This type of pattern. It's kind of funny. What happens here? Is that our bounce? Is that going to be our bounce, or are we going to break down? I'm curious what we finna do here. What we finna do here. Oh shit, Disney. I gotta write these things down. DIS.
problems, the long list that we've talked about at length. For Larry Kellner, he's been the Boeing chair since 2019. This puts him in a very tough spot where many people are
The heads of the nation's largest airlines want to sit down with Boeing. Phil LeBeau has the details, like getting called into the principal's office. Phil.
Well, they're requesting it from the board of directors, and this will start next week at various headquarters for U.S. airlines. Larry Kellner, chair of Boeing, along with some board members, will be at each of these visits. CEO Dave Calhoun, by the way, will not be included in any of these visits. Look, we've talked about this for some time. The airlines have been asking for these Boeing meetings. Basically, they all wanted to go to Boeing together. Boeing said, no, we'll come to you with some of the board members. They're frustrated with Boeing, with the delays, with the manufacturing problems, the long list that we've talked about at length. For Larry Kellner, he's been the Boeing chair since 2019. This puts him in a very tough spot where many people are saying they want to see some concrete steps from Boeing. It cannot be at the edges. As you take a look at shares of Boeing, keep in mind that Dave Calhoun, and we're going back to when he was named CEO, that's the chart you're looking at here. He says that he supports these meetings. We'll see what happens over the next week. Guys, back to you.
All right, Phil, thank you. Phil LeBeau, we got a lot more live market coverage for you and a lot more Sarah Eisen.
With David Faber.
When we come
Can't
back.
beat that.
Ask yourself why there's this crazy bad news with Boeing, but it also just won't sell off. Ask yourself. It's crazy, bro. It really is. Next week, we're going to make this stream a lot better. Next week. I would do it today, but the market, we got no volume. Shit, where am I at here? Let's see what's going on in small cap land. Thank you guys for the likes. I greatly appreciate all of y'all. Sorry for being angry this morning. I think I needed to bite into a Snickers or crack it, whatever the hell the Snickers saying is. Whatever the heck it is. Yeah, let's see here. Yeah, it doesn't seem like there's much going on. It really doesn't. OCGN, we can look at that.
Those who manage risk by anticipating each movement. Flawless execution.
Flawless execution. I love this commercial.
Identify the goal. Match power with precision.
I need you all to think about this commercial, and I'm going to show you guys if anybody's even here.
It's opportunity.
When the bell rings, overtime, we cover it all.
OCGN's going.
Keep the rally going. HSBC's Ryan Wang with us on why GDP could be the key data point to watch from here.
Plus, Disney is the best performing Dow stock this year. Closer look at the activist battle as the number of high-profile shareholders starts to take sides.
And Nike and Lululemon falling, FedEx surging. We're going to break down the earnings movers and the messages from those.
See what I mean? She said
Right now, take a look at the market.
FedEx surging. FedEx ain't surging.
Now down 0.2.
What you mean surging?
Flat about an hour ago. Nasdaq also down a little less than that. Consumer discretionary is weighing today on some of those.
It's flat.
Like Nike and
On the day, it's flat.
following this week's Fed meeting.
No, it's down.
Earnings season, investors
It's down a little bit. It's selling off during the day. Yes, it gapped up pre-market, but
CNBC senior markets commentator Mike Santoli. So what is it?
We cleared a bunch of these hurdles this week. I think one of the things weighing on the market, not weighing on the market, but causing the market to hesitate is there's not one big obvious thing we're building up toward. PCE inflation is in a week. Did Powell kind of drain some of the suspense out of that? Probably. He sort of said the February numbers look like they're going to be fine, at least in their eyes. So maybe that's
oh my god, I don't know what I gotta do. to get this thing to just do this and to stay there, I'm going to have to restart my computer, unfortunately. I mean, I'm not going to do it right yet, but I'll just have to get you guys to bear with me. Alright. Come on. Alright, so once again, look, it's already doing it. Alright, Rivian's bouncing. Feels like we're trying to get a bounce here. AMD on its bottom. Just listen, guys, be careful. The volume is awful today. Like, seriously, the volume is god-awful. Look, didn't I just fucking change my shit? Didn't I just change it? Could have swore I just changed it. And look, right off of that neckline, bang. I'm going to go grab something to eat. I'll throw on, I will throw on whatchamacallit. Let's see. Bitcoin. Bitcoin just really hasn't moved. What do you guys want me to put in the chat? What do you guys want me to put up? I'll be right back in 1 second.
It's worth watching. Starting to make a stand here higher against China, China's currency, the Japanese yen, and others. That's a headwind, certainly for earnings, and has proven to be for the markets, especially if it's reflecting just this better growth profile for the U.S., which is good, but also means maybe we'll get fewer cuts.
Yeah, it is interesting because it sort of seemed for a while the Fed was going to be early and leading in terms of easing, and now it's sort of others are starting, and maybe the Fed is going to be hesitant or at least sort of a lot of space in between cuts. So I think it's generally a good news story, but yes, the dollar could be, a complicating counter-trend factor there.
Broadening. Is it for real?
It's for real for now. I do think so. I mean, you still have the market really concentrated, but, financials doing well, JP Morgan hitting an all-time high. Industrials, in fact, are so broad that maybe people are saying they're kind of running a little hot at this point. You look at things like, I think there were some downgrades today of Vulcan Materials and Martin Marietta Materials, which have been the best performing types of stocks in industrials. It's sand and gravel, right? It's infrastructure stuff. And those stocks look, like they're piping hot. So yeah, I think it's broader. The question is, does that mean the overall market is due for a rest? Possibly.
I do wonder if inflation, though, is a catalyst, even with Powell sort of cool with the numbers coming in hot. If they continue to do so, I'm not sure he can do that much longer. It keeps
the debate alive, no doubt about it. I agree. Yeah.
All right, thanks, Mike. As we close out a big week for the Fed and economic data, our next guest sees rate cuts start.
Well, guys, again, I hate to be the bearer of bad news here, but it doesn't seem like there's going to be much going on today. This volume is trash. Like, it's so bad. It's so bad. At least I think it is. Volume is garbage today. Alright, so it looks like we can play off of this. Looks like we're above that level here on the SPY. Did that help the Qs out any? Dude, what is going the fuck on with my charts, bro? This shit is spazzing out. Look at it. It's going nuts. Alright, so I think that was... I think that's our Q. I think that's our Q right there. Look how bad the down's down. The down is down bad, guys. So I said it this morning. Watch for rotation in the technology. Look for Snowflake, CrowdStrike. Like, I might try it. I don't want to put any fucking risk on because the market's not really moving. But if the Qs are going to move, like Snowflake, right? CrowdStrike. What else? Microsoft. Okay. AMD. Look at AMD trying to bounce. Dude, and why is it not doing this? What I said for it to do. Right here. Stay right there, just like that. So next time I click on you, you're going to show up just like this. Just like that, right? Keep it zoomed in. Apply. Let me do it again. Apply. Let's go look at the, let's go see what sector is in the NASDAQ composite that's crushing it. So Google. Like, everything is red in the NASDAQ composite. Wow. So how is it turning the hell around? That's crazy. That's weird. What is this? Healthcare? GMAB. Netflix is green. CDLX. CM Baidu. Mitch. That's so funny. Mitch.
STLA, Stellantis, discussing the NHTSA recalls that defects on airbag inflators is estimated to exist in less than 1% of the recall population. That's STLA and the Tangolima Alpha.
Yeah, guys, please be careful out there. Again, if there's nothing there to trade, there's nothing there to trade. All right, so they said FedEx is surging. Why that stock is surging? It looks like it's pulling back to me, bro. There's not really anything going on today. This blows. MSC. UiPath. Looks like healthcare is getting a nice bid today. Not sure why Boeing's up. Look, Toyota's green again. This thing is just a monster, bro. Toyota is just a monster. Your insurance having a decent day. Diversified. Regionals. So let's look at Merck. I can't believe that, bro. I cannot believe Tesla. I really can't. I cannot believe it. I cannot fucking believe it. They're straight assholes, yo. Straight assholes, bro. They just ran it up on these fools. They run it up. Stock goes higher. They don't even get paid, bro. They don't even get paid. You can't tell me, look at the delta, look at this, that, the third, motherfucker. Because if the delta says 3 on a stock that's 5, you should be getting 3 cents on a dollar. Okay? No ifs, ands, or buts. It moves $1, you should get $3. It did it in a timely manner as well. So I don't want to hear none of that skit scat skirt shit. Okay? They out here scamming your ass. There ain't nothing short of it. Okay? So it feels like today is going to be our day to take a day off before you hurt yourself trying to do something you shouldn't do. Maybe look at small caps, bro. Maybe that's going to send a lot of people over to small caps. Ricky G, thank you, bro. Appreciate you, bro. Yeah, you can. You can. Alright. We just trying to get up out the trenches. I feel you, bro. I feel. Alright, so let's see. Let me see here. Wait. Why they want to do that? No. That's wild. That is seriously wild. So, do you guys see all these goofballs, right? They're like, oh, this person's on this side. This person's on that side. Bro, leave it to the dumbass goofball, right? The creator of Star Wars. No offense to the movie. Like the movie. Don't like the mother he turned into when he got older. He's a little weirdo, alright? All these weird little Hollywood people, obviously they're going to say, yeah, we want to be with Bob Iger or Rob. I don't even know his name. Rob, Bob, same difference, right? Of course they're going to back him up. But that does not, like, backing him up is not bringing Disney in any money. Okay? At the end of the day, they're doing this for the fruitcake shit. And that's why. They're doing this because they are woke, I guess you could say. Whatever y'all want to call it. I don't know what it is. I don't really care. And that's why they're sticking up for him, because there's an agenda here. There's an agenda being pushed. Alright? And that's the Hollywood agenda. That's the, feel bad because a person's black, or feel bad because they're Asian, or, yes, we want to let a whole bunch of Spanish people, even though it's unfair to people in China, Japan, the Middle East, right? Europe. Those people that would like to come here, they got an ocean in the middle of them. Just because the Spanish people don't have an ocean blocking them in here doesn't mean that they get to just do whatever the fuck they want. All right? There's other people around the world that would like to be able to become a citizen here, and they're stifling on that. They're fucking up their flow. They're I guess you could say they're messing with their hustle, trying to get over here. Well, we can't because because 3 million Spanish people just walked in here this month. So y'all over in Asia, Japan, Middle East, y'all gotta wait. Y'all gonna have to wait another year or two. Matter of fact, listen, I ain't even gonna lie to y'all. I ain't even gonna front. Y'all ain't getting in. They don't want y'all. They don't want y'all. So just, just try to make the best of what you got. Or see if you can't cross in over to Europe. See if you can't take your little ass over to Europe. Get in there, and maybe you get a little flight, because Europe and America are kind of the same thing. You saw Obama over there the other day, didn't you? Yeah, go to Europe, bro. The U.S. is going Spanish, bro. The U.S. is going Spanish.
$1.18 at the highs now.
OCGN. I need a hit. I need a lick to end this month off. I need a lick. Let's do this. I need a lick. Not necessarily today. I'm not going to attempt to get my lick today, but I will be trying to get it next week. I just think next week's going to be boring. I don't want to put that on y'all, but I'm just saying I really think that it's going to get real boring here real quick. Data's starting to slow up. We know what the Fed's doing. Bro, OCGN, what a shit show. What a shit show of a stock, bro. I would be ashamed to be OCGN. Who's the CEO of OCGN? This thing has room to 250. I mean, I doubt that it's going to get there. But you have a little gap fill here at $2. Let's look for $2 real quick. Let's look for $2.
Were you surprised? I mean, you know, yesterday ISS, the proxy advisory firm, came out, Charles.
Watch it fail. It's going to get ready and fail. Damn, look at that increase in volume, bro. Damn, son. Where'd you find that one? You guys know Future and what's his name's album's getting ready to come out? Shit, I left my stuff in the thing. Hold on 1 second. I'll be right back. Give me 1 second. OCGN. I'm watching OCGN.
And I think he's as effective as anyone else could do that. Someone who was picked by the company itself to come in at this point in time, I think it has a problem because they owe their deceit to Mr. Iger. Mr. Peltz, if it comes from the shareholders, wouldn't. And I think that that's the whole point here.
Yeah, but what are they playing for here? It's, you know, Iger's. I mean, he's already 72. He's already been. I mean, I'm confident when he says he's only going to serve another 2 years at most. That's the case. It's not like he's looking to maintain or continue to exercise any power here. So, wouldn't it be a different process, perhaps, than the one they faced in the past?
No, I don't think so. Listen, I can think of several folks in their 80s or later who remained at their own companies well beyond. I think AIG was always a great example of that. And you see there are other places. Sometimes people just don't want to know.
From DD to Mike, and he will be going this weekend to the LZ World Tour to compete. He is coming to win. So this is his first time driving.
Bro, if I sat there and talked that whole time with, if I talked that whole time and the mic was off, bro, I'm gonna be hot. That none of y'all got to hear my rant. It's okay, though. If I get long, I'll let you guys know. I'm going to wait for a pullback here.
Fights with activist investors when they win, when they join the board, especially when it gets ugly like this with the relationship with the CEO.
Well, you know, it's interesting. You have to go back and look at Peltz's fight years ago. Peltz had been arguing for, if you recall, the split up of the company.
I mean, 75 cents on a dot. Man, that sucks. I don't know how much is left on this thing, but I'll let you guys know if I get into something. Just give me 1 second to eat this. Damn. I feel bad. I feel bad for him. Can't say I didn't see it coming. I'm just watching something real quick. If you guys just give me 1 second. I'll be right back with you. It's just a boring day today. Okay, cool. Nobody here anyway. Listen, I love you guys. I appreciate all of you guys. Sorry for the frustration again. It's just getting irritating when I come in here and then not only is the market sleeping, but you know my charts are lagging, and I just need to turn it off, turn it back on, and all that fun stuff. And I should have done it before the stream, but what are you gonna do? I need to find what's going to happen here with the market, because you know, it's getting, wow, we're seriously not moving at all. Seriously not moving at all. Guys, we opened up at 445.36 and we're at 445.56. Like, we've moved 20 cents. It's going good. How about you, Matt? How you doing, buddy? I'm just frustrated because, you know, the market's sleeping right now. Market's sleeping. I miss Google. It's okay. I'm not, you know, it is what it is. We called Google out this morning. Like, we saw the volume pre-market and we said, hey now, watch Google. Look, even Google's trying to put in a double top up there, but I mean, it's low volume. I wouldn't consider that a double top. I mean, it is what it is. It is a double top, but it's got some nice volume. It's just one of those days, you know. It's one of those days, and I hate to say it, but I wonder if next week is going to be the same. We have no catalyst other than PCE on Friday of next week. That's the end of the week. You have GDP revisions, unless, because it's Q4. I think these are Q4 revisions, right? I think it's Q4 revisions, because I thought we already got GDP. I don't know, but excuse me, sorry about that, but yeah, so like Baidu this morning, I said if it went back down to whatchamacallit, that I thought it was too far of a pullback. And it seems as though that was the case. I'm watching Coinbase and Mara and stuff, but they're not. Okay, look, they are bouncing now, see? They are bouncing. Okay, cool. Okay, cool. We might have something here now. The thing is, you got to be careful, because they've been scamming the shit out of everybody today. Okay, sweetheart. Okay. And I wanted to, I'm gonna be honest. I'm a little scared to put risk on right now. Like, look at this volume on Coinbase. It's garbage. Whoa. This is the exact thing I'm talking about. It's my morning in a nutshell. Fuck. What's gold doing? TLT flat. GLD still pulling back further? Wow. This could be weird. Dixie, not gonna come up. What are you watching today, though, man? How are you doing, Matt? I might end up just taking a day off. You know, do something else, because this is. Oh shit, DWAC. I forgot about DWAC. We mentioned that.
$4 million fraud judgment against Trump starting on Monday.
That's so sick that they would do a fucking fraud thing against our prior president. That shows you how fucked up these people are, guys. I don't give a shit if it's Biden, Obama, Trump, what's her face. I don't give a shit. Stop talking about your presidents and your leaders going to jail. They have done more. Every time I hear this is coming from a mouth that has not done any type of public service at all, whether it's for your own doing or for the public. It doesn't matter. What's your ass doing? What is your ass doing? You volunteer firefighter? All right, like, do you do shit for the community? Okay, if you don't, then I don't want to hear a goddamn thing about talking about presidents need to go to jail. No, they need to leave them all the fuck alone. And that bitch need to go figure out her life, because sending a white man that's our president to jail and she gets her jollies off on it, that's sick, and that's not American. All right, we need to get your ass up out of here, just like some of the Ivy League schools. All right, it's sick, is what it is. All right, and that's just how I feel about it. I do. And this Apple stuff is my point why Biden shouldn't be president. Because of the people he hires. They are not your friends. Look at Apple, for instance. They didn't do anything wrong. And they're sitting there trying to tell a company how to be ran. Boy, get the fuck out of here with that shit. Get out of here with that. Are you crazy? I really hate where America's going down. I hate the road that it's going down. I really do. And the worst part is that people... Visa? Okay, let's do it. Let's look at Visa. My fault, bro. The thing is, though, is I think there are so many people out here that just talk shit on Trump. They don't even understand that it's not the president. It's about who you have in your cabinet. Right? That goes in for businesses, right? And all the fines and the... what we call regulation. Damn, why did Visa get hit today, bro? Dude, this is exactly what we want. This is what... Bro. Damn, bro, my guy, where were you like 2 hours ago with Visa? I would have shorted... We could have all shorted this shit out of this. Look at that. Broke prior day's lows, bang, it's on. That's crazy. That's a nice move. I'll get it, Turkey. Let's see here. I would give it a little bit. Let's see, look at Visa. Good for leaps, you think? Like, to the long side or to the short side? I would say you have to juggle between rates being cut, which it's not, that doesn't help them. It doesn't hurt them. It'll do more harm than good. If we go to start cutting rates, that means they won't bring as much money in. You can see once they started to raise rates, what happened. You know what I mean? This thing has been on a tear the past couple years. Why? Because they started raising rates. So that's how you got to look at these. Just like what else? The banks. They get to make more money on loans. Look at J.P. Morgan, along with the bank term lending program. For a short. Yeah, I think. Here's the thing. I wouldn't short Visa. Visa is in every single pocket of the United States, in every person's pocket. This thing gets used every single day. Visa gets. Listen, you could. I would wait to see some volume. Just my personal opinion. I just don't think it's a good look. I don't know. It probably will. If you get a bounce back, it might work. Who am I to say what works and doesn't work? I just don't think I could do it. Because I feel like, unless, like, what I would do is I would look to see how it reacts on the day that Powell cuts rates. Or if we get expected to get these June cuts, depending on if we get them or don't get them, see how Verizon trades up, going into the summertime. That's how I'd have to play it. I couldn't buy leaps short. You're fighting the trend right now. You do have divergence. You do have some divergence here. It's making new highs. The relative strength is leaving. But listen, who am I to say? It could work, right? It could work, but me personally, I couldn't do it. Try it. See, you might get paid. I mean, I would wait for a bounce back. See, what I would do is I would wait for 287. See if it gets up to 287, and think about it then. I would watch 287. But I don't think it's a bad idea. I think your head's in the right place, Matt. You got flat top resistance there. It just broke. See what it does right here at 285. Or I'm sorry, that level is 286. But 285 is another level too. See what happens right here. See what happens to it right there. Why did this thing get smoked today? That's what I want to know. Tesla fall? When did Tesla fall? Looks like Tesla's going up to me. I mean, it came in with a gap down. It's not falling though. Man, what'd I say? I told y'all they were just gonna run this shit up at like 2 o'clock. Watch. It's down 1.5% right now, but like, come on, man, give me that break even. These contracts are gonna get so fucking screwed. Come on, come out with some news or something, Eli. That was the target, guys. Was 172 on Tesla, and it's not paying you. So I'm glad I didn't go in with that thing with size. I still have the calls, bro. I still have calls from that pullback. They're still down. And we're coming in the money. Or not in the money, but we're coming close. So just watch. Yeah, they out there scamming. Be careful. I don't have much more, guys. I'm just gonna watch the Qs and the indexes. I'll leave the stream up. I'll be here. I just think that there's nothing going on unless something changes. If you look at the SPY, you have this is why I'm getting frustrated. Like, there's no reason why it should do that. All right. Time axis. Apply. Okay. So, next time I click the SPY, it should come up just like this. I just saved it. It should come up like that. But this downtrend, right? You have this head and shoulders here. Looks like that level is getting ready to break. Looks like you're about to pull it back. Yeah, we're just trading sideways today. That's a damn shame. We're down 0.1%. We're down 0.1%. Market doesn't want to move. I missed Apple short yesterday. That's another one I'm upset about. You know, if you guys see stuff like that, man, throw it in the chat. Like, you know what I mean? Because, listen, I'm going to tell you all right now. We catch one of these big hitters. I got some money on it. I'm going to pay your ass. Let me tell you, it goes both ways, not just one way. Here. And that's what I, ultimately would like to do. That's how they do it in the institution world, right? They have a lot of people, and they cover the markets, so they don't miss the days that have relative strength and relative weakness in the sectors. AI induced stock markets front-loaded UBS. I was wondering about Carvana and AI. Okay, AI is down. CVNA probably down too. Shopify, Spotify, all the fives. SQ. I'm just going off right now. Snow. Snow. Flat. Ford. Lee. Not doing anything. So yesterday we could have got this Goldman Sachs. We called that out yesterday. That was a nice call out yesterday. CRM. I'm just gonna run through and see if I see something. Breakthrough AI stocks to watch part 1. Oh shit. Coinbase. Wait. Is there going to be a shutdown?
After the break, what the Department of Justice got wrong and may have missed in its antitrust suit against Apple.
What they got wrong and what they may have missed. Oh wow, that's so funny. Doesn't surprise me. They just want to go out attacking people. All right, so that's a nice test of yesterday's double bottom low. I'm gonna go make some more coffee, gang. Fucking Tesla. That's so funny.
One more thing. Who's your rock? Learn more at Prudential.com. Is this your dream of retirement? How about this sweet deal? I like fishing. Or is this a little more your style? Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this. Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility, our stock market outlook, plus the Fisher investment difference. 3 indispensable guides, yours free for calling 1-800-213-5317. Fisher Investments' disciplined approach will help see you through the market's ups and downs, give you the confidence you need to reach a comfortable retirement. And our fees
Toyota's been a beast.
do better when our clients do better.
Fucking just gaps up every damn day, bro. It's crazy.
See if your dream retirement is on track. If your retirement
Something to
portfolio
trade.
is $500,000 or more, give us a call. Call 1-800-213-5317. Municipal bonds don't usually get the media coverage the stock market does. In fact, most people don't find them all that exciting. But if you're looking for the potential for consistent income that's federally tax-free, now is an excellent time to consider municipal bonds from Henyon & Walsh. If you have at least 10,000
Wonder what EWJ is doing. Japan. Still going higher. EEM. Gapping down.
Details about how bonds can be an important part of your portfolio. Henyon & Walsh has specialized in fixed income and growth solutions for 30 years and offers high-quality municipal bonds from across the country. They provide the potential for regular income, are federally tax-free, and have historically low risk. Call today to request your free bond guide.
My fault, guys.
376-4376.
TLT.
800-376-4376.
Yeah, today's a boring day, everyone. So just don't get, unless you get some type of news or something. Just be careful out there, guys. I'll be right back. Happy Friday, Bingo. It's good to see you, bro. I was just looking at this double top. We might get something. Is that a memory? Recommend to increase your memory limit. One thing, blah, blah, blah. I get it. I get it. I get it. I just got to restart my computer, and I got to start cleaning up my charts. I know. I know. I get it. Alright, so give me a couple minutes. We'll see and dictate whether or not we want to take a short here. I'm not sure. I'd watch VWAP. I would be concerned with VWAP. I just need to shut my computer off and turn it back on. And then things will straighten themselves out. And then clean up a whole bunch of charts. The fuck? I'm so tired of hearing about this DOJ stuff. I really am. I was thinking about it, but here's the thing, Bingo. I don't know. I don't know if I want to do anything, because I don't think we get volume or anything. I don't think the market moves. I just don't. 70% of traders left and are hanging out, ready to watch March Madness and drink and hang out with their friends. And smoke weed. Like, that's it. They left the markets to go watch March Madness. Or they left, you know, their job. They're not at their desk right now. They're at home with beer and weed, ready to watch March Madness and gamble all day. That's the conclusion that I've come to. It's March Madness.
House passes $1.2 trillion government funding package.
That'll get it going. Okay, so they did it. That could get the market going. Hold up, that might get them to pick their phone up and start buying here. Oh my God.
Certainly are faced with FTC, for example, Amazon and Meta, DOJ, Google, or against Google. One mega cap, though, that at least right now has seemed to dodge some scrutiny. Microsoft.
All right, so we have a 15-minute trade line, VWAP, all that fun stuff. Let's see. Let's see what happens here. And if anybody says tax the rich, like, bro, stop. You just sound dumb.
That deal includes a $650 million licensing fee to Inflection, and that, according to the information, helps provide investors with a modest return on their capital. Of course, there's also Microsoft's cumulative $13 billion investment into OpenAI. Satya Nadella telling board members back in November, quote, if OpenAI disappeared tomorrow, we have all the IP rights and all the capability. We have the people, he says, we have the compute, we have the data, we have everything. We are below them, above them, and around.
I want to see if we, it just sucks we don't have any volume. If we had volume, I'd feel a lot more confident. But look here on the daily chart on the Qs. If we continue to be stuck below yesterday's close, I mean, we got to remain short, honestly. I think it's not moving. I don't know. I don't know. I don't understand why it's being so, why there's like no liquidity in the markets. Like, look at the IWM, it's getting crushed. Okay, I'm not sure what happened there.
Next week could be very different. I was at GTC this week, David and Sarah, and I was at that talk with the...
If I do anything, I'll let you guys know. I'll throw it down in the chat. Right now, I'm kind of just looking at...
And they were asked by Jensen Huang himself, why did you leave Google to go start your own companies that are now sort of darlings in the Gen AI space? And they just said, essentially, they didn't ship stuff at Google. And generative AI needs to be tested in the real world. And that is sort of maybe the pain point here. How quickly does Alphabet want to move? How quickly is it willing to disrupt its existing business or not? And that's going to be key going forward. That's a really interesting insight, David. Thank you very much, David Bosa. Wells Fargo cutting its price target on both Lululemon and Nike after results last night, adding that the bulls are running out of patience.
Thank you guys. Thank you guys for the likes. Wow, look at NVIDIA. Wow, what a monster, bro. It did it on fairly low volume, too. How did Google fare? Did it continue as well? Google didn't really, so... There was your outperformer there on NVIDIA. Micron, did it do anything? Nope. ARM? Nope. Damn. So the king has returned to the streets and regained its crown. It said, "Hold up. There's a lot of fakers out here. There's a lot of fake artists out here choking."
It was an obvious choice for all of the things that we wanted, appearance, durability. It was a no-brainer.
We loved the Timber Tech product so much that we had to do the railing as well.
With what we've experienced with Timber Tech, there is no...
Now, this is the same setup as Microsoft. If only I could get Microsoft to make this move. This consolidation, kind of gaps up, breaks down, rally. Alright, but Microsoft already did that. Oh my god, bro. Like, why do I have to push backspace twice? I just want to know why. If I do this, right? Okay. Alright, gang. Bet. Why is it still lit? See, I might have messed it up now that I did that. But I have to keep clicking it twice, and I don't understand why. Let me find out where these things are going.
With over 50 years of loving kindness, we salute our residents who remind us every day that
Apple, Cron, CGC. What do we have? MSOS? Is that going? Yep. Chronos. Bro, are you kidding me? Canopy growth? Like, Did anybody else see the MLS MSOs? If there's anybody here.
IDN, check, $2.84, 2%.
Nike and Lululemon both falling hard this morning after both issuing softer guidance than the street was looking for. Our next guest lowering his price target on both the stocks, sticking on the sidelines for Lululemon, worried about the U.S. slowdown, but still with an overweight rating on Nike, noting that new shoes in the Olympics could give bulls some hope. Joining us now is Wells Fargo's Ike Borchow. Let's start with the Nike call because you took down your price target, but still see almost what 20, at least 20% upside for the stock.
STLA, Stellantis laying off 400 employees in the U.S. according to Wall Street Journal. That's Sandy Tango Lima Alpha, STLA.
Is TerraSen not a company anymore or something? GTBIF, that's what it was. Green Thumb. Dude.
Conference call yesterday too, Ike, and we saw that in the quarterly numbers, but then when they did the preliminary forecast for fiscal 2025, expecting negative growth in the first half, wasn't that a surprise to Wall Street?
Dude, this ain't nothing but stock splits and shit, bro. That's crazy. I wonder if there's...
ADBE, Adobe shares down about 2.5% now, just near the just off the lows, 498.53.
I had to get some coffee made, gang. Gang.
To you.
You.
Performance of value over growth. Do you see that changing? Is now the time to allocate towards growth?
Well, first of all, to follow up on the earnings conversation, I think that the first quarter reports, as long as nothing bad happens, as long as there aren't any big disappointments, I don't think it's going to be that big of a deal. It's expected to be the most muted quarter of earnings growth for the whole year at 3.5%, as Joe mentioned. You look at the other quarters, Q2, 9%, Q3 at 8.7%, Q4, 14.2%. Right. If we can pull that off, that's a reason to get more bullish as the year goes on. I think Q1 might actually be kind of a nothing burger, really, so to speak. So back to the conversation about value and what's happened in the last month or so, it's all about a rotation. We came into the year feeling like some of these trades, the growth trades, were already overcrowded. Then they got even more overcrowded and continued to go on. And investors who are in those names, I think rightfully have stayed in those names, but it was very difficult to convince yourself that it was a good entry point. So then money that is looking for a place to go is naturally going to look at the places that are undervalued, or at least relatively undervalued to things that have run up so much. And add to that surprisingly strong GDP numbers and a Fed that says we don't need to cut because everything is pretty good, labor market's still strong, and you see this resurgence of the cyclical trade. Cyclicals are inherently value sectors. So I think a lot of it has to do with a rotation. One of the things that's important that I think people should pay attention to is that the rally as we came into the year, when you look at small caps and the run-up in small caps, a lot of that was originally driven by small cap growth, which is not usually the behavior that happens mid-cycle-ish. You want to see small cap value add to that. And now we're seeing small cap value start to take part. I think that's a good sign for risk appetite.
Can I jump in on
Yeah,
what
just one quick. To Liz's point, actually, over the last month, energy, the best performing sector, up 7%, followed by materials and industrial. So those cyclical names starting to show some leadership. Jim, over to you.
So, well said. Rotation. And when I hear that word rotation, what I wonder is this just sentiment driven or is it something fundamentally based? I think people who watch the show, and certainly my colleagues to the right of me, know that I am at heart a value investor. And I've been preaching for quite some time, for basically 2 years, that these stocks, financials, industrials, materials, energies, are undervalued, that there are fundamental reasons to own them. As we go into this first quarter earnings seasons, folks, what I'm questioning is whether this rotation is just a fad, if it's just sentiment, if people got tired with the Mag 7 and so now they're going to try on the cyclicals, the value stocks, or if there will be real legs to it. Now, I happen to believe, and with every stock, I don't care whether it's Citigroup or General Motors or Qualcomm, I put forth the analytical reason for why I think the fundamental basis is there. But the question still lingers. Is this rotation just sentiment driven? Is it a fad? Or is there fundamental basis? And I'm looking, Liz, to the first quarter to get some support on the fundamental call that I'm making. That General Motors is selling a lot of cars and they've got it at a good profit level. That Citigroup is cutting back expenses and sees enough growth that it can buy back its shares meaningfully. I mean, I can go down a long list through the sectors we're talking about, financials, industrials, energy, materials, but the first quarter is a proving ground.
So you're saying it's a proving ground. I want to go back to your argument. I know you said you're leaning on the fundamentals. Let's go to this sentiment. Isn't a lot of this sentiment based on the idea that we're going to get rate cuts this year, probably 3? I was speaking to the chief investment strategist of KKR, Paula Campbell Roberts. She was saying their thesis is even after the Fed meeting that there's only going to be 2 rate cuts. How important is the actual number of the rate cuts to the sentiment and part of this rally that we're seeing?
Yeah, I'm going to say what we all know. It depends on what the reason for the rate cuts are. And remember, we walked into this year with the market expecting 6 rate cuts. We all on the desk knew, every single one of us said, listen, if you're getting 6 rate cuts, that's not good for the stock market. That's because the economy's in the tank. And I can make the counter argument that, what if we get 2? What if we get none, right? Torsten Slok at Apollo is one of the most vociferous in saying that maybe we get no rate cuts this year.
Right.
Well, that would be on the back of, presumably, better economic growth. We can't rule out stagflation. Of course, we can't rule that out. But it's conceivable that you get no rate cuts or 2 rate cuts because the economy is going gangbusters. And you know what should do well in that environment? Not just cyclicals, but the small caps that Liz mentioned. Now, small caps, and I see Frank smiling. I don't know if we can see that on camera. Small caps are laboring right now under the presumption, and it's valid, that their financing costs are too high. So that's something we've got to fight against. But if the economy is going gangbusters, that might be enough to power the small caps through those higher financing costs.
You know, a lot of calls about small caps rallying this year. I think Tom Lee says they're going to be up 50% this year. I didn't look at them recently, but I think for the year they're up maybe 3%. I mean, so a 47% gain.
2.5%.
2.5%. A 47%, 46%, whatever it is, gain for the rest of the year. I mean, it seems unlikely. But, I mean, tell me if I'm wrong, Liz. I mean, even with 3 cuts, does that seem like a likely scenario from this point on to see small caps go up more than 40%?
No, that doesn't seem likely really in any calendar year, but stuff that hasn't happened before happens all the time. So Tom could end up being right. That seems like a lot to me, even coming from somebody who loves it when small caps outperform. But what we need from the economy is to really figure out where we are in the cycle. And anybody who watches this show or other shows that I'm on is tired of hearing me say that. But I continue to think that there is a huge debate between, are we early to mid-cycle expansion or are we late cycle euphoria? And to Jim's point, if there isn't fundamental strength that backs up some of this rotation, we're late cycle euphoria, and that's that. The issue here is that this cycle is becoming one of the longest that we've ever experienced, and we're starting to hit new records. We've got now the longest yield curve inversion ever. If the Fed makes it to the November meeting without cutting, it'll be the longest pause between the last hike and the first cut. So we continue to make these new records. We're actually at a point where we're knocking on the doorstep of the longest period of time when the S&P hasn't had a 2% correction in a day. So this cycle is just elongated further and further, and that could be the thing that eventually, if it does turn, we'll be like, oh, see, we were late cycle. But this argument rages on.
If you really believe that if small cap's going to rally, then regional banks are the obvious proxy for that, and you just buy the regional banks.
In all fairness, regional banks are outperforming since the Fed meeting. Small sample size, just a few days, but they are outperforming. We do want to get to something that definitely is working right now. We're going to hit our chart of the day. It's FedEx. Shares hitting a new record high after beating earnings and announcing a $5 billion share buyback. I'm not going to say this report was a surprise, but there was a lot of hand-wringing. I'm going to do some hand-wringing for the people watching on mute. A lot of consternation about this one. Jim, you're laughing. What were your expectations? How surprised are you about FedEx doing this well today?
Well, look, I'm happy. I mean, I'm happy to the conversation we're just having, right? You want FedEx to do well if you're bullish on cyclicals. And the hand-wringing, I was laughing because that's the right approach, right? People have learned to be disappointed in FedEx over the last several years. So it's understandable that there was hand-wringing. Look, it's a good report. I'm not in the stock, folks. But certainly you want to see a company like this do well.
So you want to see it do well. Steve Weiss, is it doing a bit too well? I mean, it missed on revenue. It did beat on EPS. A lot of it was hinging on the Express results. They beat on margin, revenue in line, but still it's declining revenue in that business.
Yeah, let's take this two ways. I mean, the stock is doing well, and that's separate from the company doing well. So Jim's view is that you want to see it do well. I'd rather see the fundamentals do better than they are. You still have down revenues. You still have negative, year-over-year comparisons in the majority of their businesses, I believe. So the fact the stock is trading up as it is, based on a bottom line beat and a top line miss, and albeit some good guidance on the bottom line, means that it's a margin story. It's not an economic growth story. So I just think that these parabolic moves are not great for the market, and that's eventually what might cook it. I mean, to have stocks moving up and down 20% on one earnings report that really don't go and destroy or significantly buttress the fundamentals, what kind of sense does that make? The answer is it doesn't make any sense.
One question for you, though, Steve. I mean, isn't this a sign that their cost-cutting efforts, their transformation efforts, the results that we saw, while they weren't amazing, the fact that they were able to lift the bottom end of guidance, isn't that a sign, and the share buyback as well, isn't that a sign that that's working? This is a company that is a pretty good read on the economy in many ways.
Yeah, Steve.
Yeah, but there again, it's the margins. It's they're cutting costs. It's not growing the business. It's not growing the packages. And if you take a look at last quarter, which was a really bad quarter, right, in terms of the market reaction, all we've done is recover that loss. So that's what I mean about the volatility in the stock price. So look, you've got a relatively new CEO there. He's been there for basically a drink of water. Give him some time to get the cost base straight, and then we'll see if volumes pick up. So they have to add back to it, or will they be caught short? So that's really the mystery here. The stock's not compellingly cheap, by the way, at this multiple. Sure, it's a discount to the market, but that's where it should be for this kind of cyclical stock.
Cost efficiency only goes so far. I mean, this company is not Meta, where they have Instagram and other levers of growth to pull. The company can affect cost efficiency and a buyback, but thereafter you need to see organic growth within the company.
All right, FedEx shares still hitting a new high, up over 7% right now. Up next, the state of retail. Lululemon and Nike under some pressure. Courtney Reagan breaks it all down, and the committee debates the space. Halftime back in just 2 minutes.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now. Insurance.
We're back on Halftime Report. Retail under some pressure. Big drops for both Lululemon and Nike. Senior retail reporter Courtney Reagan is following the moves. Courtney.
Hi, Frank. Good to see you. So Lululemon put up a strong holiday quarter with strong sales and expanding margins, but it's really being overshadowed by that forward-looking guidance. On the top of the earnings call, though, CEO Calvin McDonald said, quote, there has been a shift in U.S. consumer behavior of late, and we're navigating what has been a slower start to the year in this market. Now, most analysts look at the stock price weakness for Lulu as a buying opportunity here, and they're looking at the guidance as conservative. They're not overly concerned about Lululemon losing share to competitors like Alo or Vuori and some of the other upstarts. Nike, too, though, outperformed for the quarter and issued disappointing guidance. Nike's been going through a turnaround effort for some time. We know that, leaving analysts mixed on near-term expectations. Executives now talking, though, less about being targeted on their direct-to-consumer selling and more channel agnostic, which actually includes leaning in with some of those wholesale partners. So the Nike story might be a little bit different from Lululemon, but we haven't really heard any weakness or potential weakness from Lululemon in quite some time, which might be a little bit of a shock to the street and part of the reason, again, for that downward pressure today.
Yeah, a lot of downward pressure, especially for Lululemon, just looking shares down double digits. Courtney, thank you very much. Joe, going to come over to you. You own Lululemon in the Joe T ETF. What's your thoughts about the quarter, and then about the thoughts about some of the speculation that, you know, the high-end consumer may be getting tired, maybe getting worn out right now?
I think you have to try and simplify this conversation the best you possibly can. If you own Lululemon and, by the way, extension, if you own Nike, because you have to be careful being very complicated and saying, okay, this is a larger read-through on the overall state of the consumer. Yes, from a fundamental standpoint, you have the first quarter for Lululemon where you sit back and say, okay, I've got some disappointment. I've got some disappointment because they delivered on the earnings, but they really didn't deliver in terms of what their guidance might be. They see something that they're somewhat concerned about. Should that make me concerned? I'll say this, okay? This is a company that has in the past disappointed in that regard and quickly recovered. So be very careful dismissing the ability of Lululemon not to recover quickly. With that being said, technically, you've got a breakdown here. The stock is below the 200-day moving average. You have to acknowledge that. In the case of Nike, you kind of have a little bit of the opposite, where the technical condition was already negative to begin with, and then you get the fundamental story. So how do you resolve all of that? You look at Lululemon, you say to yourself, okay, technically I've got a little bit of a breakdown. Okay. Fundamentally, I see something in the future that will resolve itself. Where's positioning? Always go back to positioning. And positioning in Lululemon right now, it's pretty long. I think it's well understood that speculators are long Lululemon right now, and I think that portends a little bit of further weakness in the near term.
So, Weiss, you got a take on Lululemon as well?
Yeah, first of all, it's such a great idea to keep Jim out of any block that concerns fashion. Look, in terms of Lululemon, expectations very high. The stock's still expensive, although I'm looking at it, I'd like to buy it. They have a unique brand there, and they do have pretty much a lock in the market. You've got Alo, but it's not the same. Lulu's much broader. But Nike specifically, this is more interesting to me. This is another sign that the Chinese population, the consumer, is having sort of their day of reckoning with U.S. brands. So if you take a look, Tesla's down, Nike's down. You can talk to others that are down. That's a real issue, and I think it's just the beginning of it. So what went from everybody's got to be in China, everybody's got to be in China, to where the big growth is, to now the reverse. The Chinese government is supporting local brands and unsupporting, maligning U.S. brands. So I don't know how they get out of that.
All right, well, Nike shares down 7%. We've got to leave the conversation there. It's time now for the headlines with Bertha Coombs. Bertha, good afternoon. Good to see you.
Hey, Frank. Russia has warned the European Union that there could be, quote, catastrophic consequences should the EU continue its plan to seize frozen Russian assets held in Western banks. It comes after the EU agreed to move ahead on a proposal to take up to $3.2 billion a year of revenues from those assets to supply arms to Ukraine. State Farm is dropping coverage for more than 70,000 homes and apartments in California starting this summer. The move comes after the insurance giants announced that it would not write any new policies in the state. State Farm is the largest insurer in California. It cites soaring costs, the increasing risk of catastrophes like wildfires, and outdated regulations as reasons for not renewing coverage and remaining a good neighbor, I guess. Tennessee, the home of country music capital Nashville, just passed a new law to protect people in the music industry from artificial intelligence. The law, called the Elvis Act, will ensure AI tools cannot replicate an artist's voice without consent. The first in the nation state law takes effect on July 1st. Makes sense that it would be Nashville. Back over to you, Frank.
Bertha, thank you very much. Have a great weekend. All right, coming up next, Dom Chu details the best sector this week, and the committee debates how to play it. Halftime returns right after this. And we're back on halftime. Communication Services is on the move. Our Dom Chu is standing by with today's Sectornomics. Dom.
So, Frank, we're talking about the fifth biggest sector in the S&P 500, which is communication services. It's roughly about 9% of the weighting in the S&P. But if you take a look at the forward valuations from a price to earnings perspective right now, we are trading just about in line with where the sector normally trades, at least on average over the past 3 years. According to data from statistics and analytics firm Y Charts, we currently trade at just around 17.5 times forward earnings. That's just about bang in line with where it's been over the last 3 years. Now, if you take a look at some of the stocks that are trading at the deepest discounts or premiums to their respective valuations on that same 3-year basis, that Y Charts data shows something interesting with regard to where we are seeing some of those biggest discrepancies. If you take a look at this, for instance, take a look at some of the stocks now that trade at the biggest premium or discount. If you look at those, and I'll try to bring them up right now, on the communication services side, on the forward PE basis, if you look at the discounts there, Match Group on the last 3 years trades at about 32 times earnings. It's currently trading at around 10 times, so a deeper 68% discount. Paramount Global, 24 times earnings on average, 9 times is where it's at right now. And then T-Mobile at 27 times earnings on an average basis, trading at 14 times. So some of the bigger discounts. And on the flip side, some of the ones trading more in line or at premiums to their valuation. Check out Meta Platforms, currently trading at about an 8% premium to its 3-year valuation versus Omnicom and AT&T, which are pretty much in line with where they've been historically. So for the past 3 years, those are some of the biggest discrepancies from a valuation standpoint. Frank, I'll send things back over to you.
All right, Dom Chu with this month's Sectornomics. Dom, thank you very much. We're going to stick with communication services. Meta is the best performing stock in the sector year to date and over the past year. Joe, you own this one.
Yeah, obviously Meta is a core holding in communication services. Overall, in the quality momentum strategy and the Joe T ETF tracks it, that we have 6 names in the communication services sector itself. Trade Desk, ticker symbol TTD, is also a name that's doing well, and Live Nation is another name that we maintain ownership in doing well. Of course, Alphabet, we're there also. And then we've got some exposure to Electronic Arts.
Right. As Don was hitting on, communication services, the best performing sector year to date. Liz, I want to bounce this off you. Brian Belsky of BMO, friend of Halftime, put out a note today saying that high profile names, that outperformance is going to subside. It's going to be other parts of the market. I mean, it sounds like he's talking about this month's Sectornomics with Meta being a strong performer, the entire sector being a strong performer. Do you see communication services not fading, but losing leadership going forward?
Well, I actually agree with Belsky. I mean, he's usually quite bullish, and I've been more cautious, but love Belsky, and I'm with him on this one. But I think it's already happening. That high-profile names have sort of come out of the forefront. If you look at the market by factors and you look at what drove the market from October through the end of last year, that momentum factor was the strongest driver. And then this year, it's sort of turned around. So momentum no longer the strongest driver. Things like quality, low volatility are driving. So you're naturally going to see other names come into the forefront. I think Meta is an example of something that has continued to be in the forefront. So that one may be more of an exception, not the rule. But I do think that as we go forward and as the rotation continues, whether fundamentally driven or not, you will see some of these names that have not been talked about start to become more popular.
All right, one name that's been talked about quite a bit, Netflix, heading for its 6th straight month of gains. Why should you own this one?
Yeah, not enough. You never own enough of the ones that go up. Look, Netflix is, I think I said in the show Wednesday or Monday, is the winner. You've got companies like Amazon with their Prime, which is clearly cut back under Jassy on the content. Then you've got the others, the standalone services that are attached to, when I say standalone, I mean they're attached to a studio or something like Disney or Paramount. And they're cutting back because the balance sheet's upside down. It's expensive to run an online service, streaming service. So Nike's got the best pricing power, and as prices continue to go up, we've seen them all raise it, you're gonna have to make choices. So guess which one you're not gonna give up? Netflix. So it looks a little stretched in the valuation performance because analysts are jumping over themselves to raise the price targets as they are in the market, as they are in NVIDIA, as they are in anything that works. But I'm staying there for now because ultimately it is the winner.
All right, Netflix shares higher today, doubling over the last year. All right, coming up next, Mike Santoli joins us right here at Post 9 with his midday word. As the major averages, they're tracking for a winning week. Much more halftime coming back right after this.
Feds.com.
And we're back on halftime. As you can see, the Dow down more than 200 points. Senior markets commentator Mike Santoli joins us with his midday word. Mike, give us a sense. What are we seeing right now?
I think we're seeing kind of a well-deserved rest. The market is kind of stepping back and kind of observing its work and likes what it sees. I think the big question, we kind of got all you would have wanted out of the three major known catalysts this week, the Fed, the NVDA, Palooza, and all the rest of it. And now it's kind of, everyone knows, kind of fully valued market. Everyone's embraced a soft landing scenario. Field position-wise, market's acting really well. It was very broad, a lot of new highs yesterday. This question is where the next source of energy might come from and in which direction. So I think that's where we are. Next week, we get this PC inflation number. It's at the end of the week.
Right.
So the market is kind of in this mode of it's been a lot of gains in the first quarter of the year, and how does that set us up for the next little bit? I do sense a little bit of rebalancing out of equities into fixed income. That's only around the edges, but it makes sense here.
I want to focus on equities just for a minute, a little bit tongue-in-cheek. What do you think about small caps? You mentioned every day on Worldwide Exchange, people come on, they say it's the year for small caps, the year for small caps. Tom Lee notably saying they're going to rise 50% this year. We were just talking, they're up under 3% so far.
Yeah, I mean, I don't assign any special powers to small caps in terms of telling us what the economy's doing or anything like that. I did run the math, though, on Tom Lee's call. If we go up 50% in the Russell 2000 this year, at the end of this year, the 5-year return for the Russell would be like 12% annualized. My point is, that's just mean reversion. That's just getting you back to kind of a normal spot if we're in a bull market. So I'm not saying it's plausible or likely. My point is there is catch-up to be had under the right circumstances, but it's also okay to ignore what they're doing if the rest of the market is okay.
Mike, I know you have an alarm clock. We might have to book you for a bull-bear debate, you and Tom Lee on Worldwide Exchange. All right, coming up here on halftime, though, streaking stocks, a handful of names in Joe's portfolio on some big runs. The committee debates these winners. That's coming up next. More halftime right after this break.
Sorry, guys. I made a cup of coffee and I went and grabbed a cup of coffee. What a frustrating morning, man. I had a feeling that this market wasn't going to move. I mean, Visa, obviously, I found out about that late. No, not IWV. Oh, wow. IWV is a thing. Okay, cool. There's no liquidity there, but, hey. If you didn't know, now you know. But V, wow. Unbelievable. Unbelievable. I do. Apple. Yeah, guys, I think it's just going to be one of those days. It's just one of those days. Like, look at Meta. Meta's flat. This, guys, I hate to say it. I hope hopefully we're not coming to that point. This could be a nice little short on Meta if you get the chance. What time is it? It's 12:45. Again, I don't think we're going to move. But if you can't get up through there, that might be a nice little area to get short. Or, I mean, you saw what you did there. You saw what you did here. All right, you saw what you did there at 510, 509.98. You saw what you did there. You saw what you did there. You saw what you did. Oh, we're there right now. What's going to happen? What you going to do, bro? What you going to do? You're going to break back above it and test this level again? Netflix is flat. What's the most... See, I would say Tesla used to be the most volatile stock in the market, but it's flat. In my opinion, it's flat. I said today, they're going to run this thing up at like 2 o'clock, 2:30, late in the day. They're just going to run it up. You're going to see a fat candle to the upside. Now, that's obviously a joke. I mean, you probably could see it for the simple fact that it came in with a gap down and, like, it's either going to, like, you got to think of it from, like, a daily chart perspective. At least that's how I like to look at it. You know, it came in with the gap down. You're trying to go green, like, 173. Like, come on, bro. Like, you're telling me that this is what's going on. They just did not want y'all to make any money today. Y'all knew, or they knew that y'all know that Tesla should go up here to test 173. So they said, nah, we can't do that. We need to take these people's money. DWAC had a little bit of news.
And we are back on halftime. Energy, the best performing S&P sector this month so far. Let's hit some energy stock streaks. Joe, you own Diamondback, which is trying for its 14th straight day of gains. We're going to start right there. Energy, do you see this leadership continuing?
First of all, I'm very fearful of this segment because we're identifying.
But anyway, I'm here if you guys have
stocks that are
anything
on a
or need
significant
anything.
winning streak,
Y'all just
which
holler at
means
me.
you know
I'm
what's
here.
coming next.
I'm going to drink
It's
this
gonna be a
coffee
losing
real
streak.
quick
Mean
and
reversion always
listen to
happens. In the case
CNBC
of
and kind of
Diamondback,
just
this is a
search
company
around
that,
the
recently
markets.
announced a $26 billion acquisition endeavor. It strengthens their position in the Permian. It also positions them to defend against remaining independent. This is one of, in my opinion, the strongest fundamental energy companies that you could own. I would advise the viewers on any pullback to add to the ownership of ticker symbol FANG. It's had a very strong performance year to date. Buy it on a correction for sure.
Right. I don't want to jinx you. I want to talk about another stock held in the JOT ETF, Valero, trying for its 13th straight day of gains.
Valero up significantly year to date, up 31%. That rivals Marathon Petroleum, which is up equally that amount. The Marathon Petroleum over the last year is actually up more than that. Both those names are owned in the JOT ETF. Fundamentally, gasoline is the strongest product of the energy complex so far year to date and over the last 3 months, and that's driving a lot of the performance. Technically overbought, I will absolutely acknowledge that. From a sentiment and position perspective, the on both Valero and MPC have price targets that are well below current price, and that's looking 12 months out. So the street is suspicious about the rally that we've witnessed here. The only negative aspect of this, as I said, is these stocks are technically overbought.
All right, you got a couple other winners in industrials, WW Grainger and also Quanta Services.
Quanta Services, that has exposure to utilities, consumer and electrical spending, excuse me, and that remains strong. They have very strong pricing power. WW Grainger, they are just basically everywhere in the industrial space. Again, strong balance sheet, quality company, finally built up some strong momentum in the last year.
These are individual stocks, but Liz, we've been talking about these sectors showing leadership over the last month or so.
Yeah, I mean, look, energy had a tough 2023, especially compared to what happened in all the other sectors. And you've seen this steady climb higher in oil prices this year. Also, if you look at energy stocks and you're playing this rotation into cyclicals, energy is the poster child for that right now if you're expecting demand to go up. And we've got energy stocks that pay a pretty healthy dividend in some places. So on the heels of we finished the hiking cycle, expecting cuts at some point perhaps this year, dividend stocks might be the place to be. You want to get into them before those cuts come closer into view.
All right, coming up, we have another winner, aerospace soaring to new heights. How the committee is playing it, that's coming up next on Halftime.
To me, a change maker is someone who sees an opportunity to make things better. I've also been told that for real change, you have to accept that it doesn't have to be perfect, but don't let perfection be the enemy of the good. And I remind myself that life is fleeting, and when you get the chance to affect change, you should move with real urgency.
Yo, what's good, Disney, y'all? Damn, that sucks. There's no volume. This thing ain't got no volume, bro. Don't even fall for it. Don't even fall for it, bro. Don't even fall for it. You getting... That's crazy.
All right, we're back on halftime. Take a look at another big winner
My boy
today.
got
It's the
salty.
ETF that tracks aerospace and defense,
Calm down, son.
hitting a fresh
Calm down,
all-time
son.
high, led by gains in Boeing. Jim, I'm going to come over to you on this one. Again, hitting an all-time high, led by Boeing today.
Yeah, I mean, Boeing's not hitting an all-time high, and I don't like the words that are about to come out of my mouth, but this is how I feel.
Don't say it.
No, I gotta be truthful here. I mean, I think Boeing's got a very long-term big problem here, and I would not touch the stock here. I sold it the Monday after the Alaska Airlines fiasco. I mean, there's talk that it's up today because major airline executives are going to talk to the board of directors at Boeing. What on earth is that going to do? There's talk that maybe Calhoun's going to leave
Get rid of Calhoun. That's what's going to do.
Weiss, calm down.
Get rid of
All right,
Calhoun.
wait, just hold on, Weiss. There's no need to interrupt there, okay? I'm making a point. Calhoun's not the problem. He's not the solution. Neither was Condit. Neither was Stonecipher, all right? There's a long list of CEOs who have not turned around the culture that got decimated by the McDonnell Douglas acquisition in the last century, okay? These are not the guys who can go down to the production line and put the bolts on the air plug that blew out in the Alaska Airlines fiasco. And by the way, the FAA is no friend of Boeing right now. I mean, after many years of all this, they're going to be slow-walking any production increases. They're going to be slow-walking any new model certifications. Production's going down. Cash flows, profits are going to be crimped by all of this. Sorry, I don't like anything that I'm saying, but it's just how I feel.
All right, well, I think we might as well just leave it there. Boeing shares are up 1% right now. Stay with us. Final trades, they're coming up on halftime.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Oh shit, bro. I did not even know, gang. I thought it was the 23rd. Yo, I did not know it was... Bro, are you kidding me, bro? I've been waiting for this. Are you kidding me? I don't even care. Whoa, 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 whoa. Hold up, hold up, hold up, hold up. Nah, fam, you see.
Why would I use kayak to compare?
I might have to end the stream. I might have to end the stream for that one.
This one's free.
All right, time for final trades here on halftime. Weiss, you are up first.
Yeah, so I just bought a little Boeing because I heard Jimmy's emotional outburst. And the bottom line is, culture starts at the top. And Calhoun has been the culture carrier here for well over a decade from when he was chair of the board and a board member. And so I better not hear Jimmy ever talk about a CEO of Cliffs or anything, because apparently he doesn't make the steel. So I think it's a great trade here. They're going on the road to get rid of Calhoun.
Jim, you're up next. We got to get this show on the road.
Yeah, Pacific Gas and Electric. A little defensive play if we're all talking about corrections.
Liz?
A commodity ETF that also has almost 50% in treasuries as a yield kicker, so you get both sides of the coin.
Seems as though NVIDIA is finally comfortable with price above 925. Here we go, March to 1,000.
All right, that's going to do it for Halftime Report. The exchange starts right now.
Frank, thank you very much. Welcome to The Exchange. I'm Tyler Mathisen in for Kelly Evans. Here's what's ahead. Not a bubble, but bubbly. That's how one of our guests describes today's market, but that doesn't mean you can't still find some bargains. He's looking for them. We'll tell you where. Plus, shares of Tesla down more than 30% this year so far. Should you buy the dip or steer clear as the EV winter continues? And Elizabeth Warren once again goes after the company. And it's been a big week for the builder stocks, but our analyst brings a surprise name not in that sector that he calls a stealth housing play. He joins us ahead. We got a mystery chart, but we begin with today's markets and Dom Chu with the numbers. Hey, Dom.
All right, it's a little bit mixed, but modestly so after coming off record days for all the indices earlier this week, especially just yesterday in that big surge that we saw in the markets. The Dow Industrial is currently down about 182 points. That's off 0.5%, relatively flat for the S&P 500. It's currently sitting at 5238, down about 3 points. At the highs of the session, we were only up about 3 points, maybe down 12 points at the low. So again, a pullback from those record high levels, but again, modestly so at this point. The NASDAQ Composite, the tech-heavier index, 16,435, outperforming up 33 points. That's up about 0.25%. The reason why we want to highlight that NASDAQ trade is because it has been the stellar one. All three of the major indices on a one-week basis are up roughly 2.25 to nearly 2.75% overall. The sectors that are leading the way higher are communication services and technology. So that kind of magnificent seven trade, alongside industrials, all up between 2.5% and 3.5%. Meanwhile, the underperformer has been on the interest rate sensitive side, XLRE, the real estate side of things, down about 1% over the last week. That's your state of play on this Friday. But the stock that a lot of focus has been on has been kind of a tale of two different types of narratives in just the last week. For Apple shares, we started the week off on a fairly positive note with some of that news reports, especially from Bloomberg, that said that it could be possibly teaming up with Alphabet's Google to offer Gemini AI, the Alphabet side of things, the AI platform, on future iPhones. That gave a boost, and then all of a sudden the Department of Justice came out with their antitrust suit against them, taking it down. And remember, yesterday's session when we were down big, shaved about $113 billion in market cap off of Apple in just one day. And Tyler, we like to give you some perspective. $113 billion is like shaving roughly the entire market cap of Boeing off of Apple's market cap in just one day alone. I'll send things back over.
Gives you a sense of scale there, Dom. Thanks very much. With the major averages on a weekly winning streak.
Tell me how SPY
on the horizon,
going down,
NVIDIA
ripping and roaring to the upside, Microsoft.
One of my next guests says we will pull back. He also says we will see Dow 100,000, and he's been around for a few market milestones like this one. Dow 10K in March of 19.
Not sure
Look at that
what Apple's trying to do there with
He even put it on a
Baidu,
baseball cap, and he hasn't aged a day. For more, let's bring in CNBC contributor Michael Farr, President and CEO of Farr Miller in Washington, along with Michael Cugino, Permanent Portfolio Family of Funds President. A pair of Michaels today. Michael Farr,
I want to thank all of y'all that joined us. I'm going to try and focus on not getting so frustrated and like doing some stuff, like, you know what I mean? I don't know. Playing video games or doing something during lunchtime, going over lessons, something. Let's see. JP Morgan. I cannot believe I did not know Future and Metro's album came out yesterday, bro. Come on, man. That's crazy. We've been waiting for that shit for a minute. That's my guy.
Other bad signs, but but not there quite yet. Reason to be worried, but not overly so.
How do you see it, Michael Cugino? Not ridiculous, but fully priced. Where are you on that spectrum?
Yeah, not only do we have the same name, but we probably have a similar viewpoint. Certainly stocks are elevated, but not unnecessarily so, given the macro story. The Fed is likely done. They just came out saying they're probably going to cut. Corporate earnings have held up. There's a lot of liquidity on the sidelines. People are working and spending. It's hard to see a negative. It's almost a perfect storm for equities to continue to bleed up right now. There are some headwinds out there, but the impact of those are being way overweighted by the positives at the moment.
So, Michael, you say that we'll probably pierce 40,000 at some point, probably have a correction at some point here.
You know what I would like?
And
I could do it in a
motor
flexible
forward
grid.
Up to 100,000.
Maybe
I want you to give me the date and time
like
that we're going to be at 100,000.
There we go. There we go.
It's in your inbox.
And then what we gonna do?
Okay. Just take a look for that. You know, when you take a look at where we are, this is math and the rule of 72 and compounding. So if the market doubles every 10 years, 15 years from now, we ought to be at 100,000. That's it. That's just the math. If we do 7.5% return on the Dow Jones Industrial Average. So I think 40,000 is on the way here. Clearly doesn't look like it's going to happen today. Next week would not be a surprise. It's not going to be that important in terms of the percentage change of your portfolio, but it's really important in that it is a great vindication and a great endorsement of the American economy, of capitalism in general, that this is the place that is the shining city on the hill where capital formation can happen, where property laws and contract laws are regarded and respected, and the American dream happens here. Every time we hit one of these levels, we all ought to put flags out in front of our houses and celebrate. This is why you watch CNBC. You understand that really the heart of America and our economy and economic growth is what keeps the American dream alive. CNBC covers it every day.
Michael Cugino, I remember, as probably you do, when the Dow was at 1,000, not anywhere near 40,000, and that sounded like hysteria. So you're on drugs. What are you smoking crack here? What do you say in terms of how I ought to position my portfolio now? I know you're a big believer in diversification and diversifying beyond merely stocks and bonds.
Yeah, I mean, I also remember Dow 36,000 when we were somewhere in the teens. So we're definitely going to continue to trend up over the years, but who knows how long that takes. I think psychologically, it's a psychological factor too. And, amen with what Michael's saying. But in terms of, how you want to position a portfolio, there are other asset classes that people need to be considering in terms of a broader comprehensive definition of wealth. That would include bonds. It would include U.S. and non-U.S. securities, stocks and bonds. It would include commodities, real estate, precious metals, et cetera. All of these things impact the economy at some level, and a properly diversified investor, even growth investors, need some offsets or some balance to a portfolio, at least for a portion of their capital. And so we would advocate, even if you feel very strongly about the stock market, there likely will be corrections or pullbacks. There could be a period where it doesn't do much, or given your liquidity needs or age or whatever, you may need more balance, more diversification, less volatility, but still getting a return. And so we would advocate for diversification as well.
Let me finish with you, Michael Farr, if I might. You say, and I think it's a telling and important point, that time and not timing is what generates wealth in the equity markets. I couldn't agree with you more. That's the lesson that you were just pointing to there. But timing does matter, doesn't it? At least at the margins, because when you buy and when you sell, if you sell, is what determines your ultimate return.
No question, Tyler. So having a discipline is really, really important. And remembering the other fundamental rule, which is buy low and sell high. When markets are making new all-time highs, you've got to be very careful about your buying, and you have to be even more careful about your owning.
All right, notice how the Qs are above that level right here.
We haven't really had a bear
Qs
market
are up there at 522. SPY going too.
But it was
Don't get it twisted, bro.
People haven't felt
We're
pain
going
in a
higher.
while.
I
People
told
say,
y'all.
Oh, the risk is fine. Oh, I can have more risk
told y'all.
exposure. Oh, this is going to work out.
Now we got to
I can
find
hold
out which
through.
one.
You haven't seen your portfolio.
We got to find out which one is the strength. Where's the strength? Obviously, NVIDIA.
big where risk portfolio. Don't be a victim of
I'm listening to that
complacency.
Future album.
Be
If
a
y'all want to
devotee
listen to
of
Future
that
album too, I
long-term
mean, just let me
goal
know. I'll
that you
play it
set
on
when you started to
YouTube.
invest. You're going to get there. Stick with it. Don't be emotional.
All right, the two Michaels, thank you very much. Have a great weekend, gentlemen. Appreciate it.
Thanks, Tyler.
Thanks.
All right, you got it. All right, let's turn to another part of the market, and that's the Reddit IPO. Shares dipping below their opening price of $47, now back above it at $47.83, hovering a little shy of $48. The stock closed up 48% from its IPO price of $34 a share yesterday, climbing as high as 70% before blowing off a little steam. Kathy was ARK Invest buying into the social media company, scooping up nearly 10,000 shares of Reddit on its first day of trading, but there are plenty of challenges in store. Julia Boorstin was on the floor of the New York Stock Exchange for yesterday's IPO, joins us now. What are the challenges ahead for Reddit? But number one is how to make money.
Well, yeah, so this company has yet to turn an annual profit. Last year reported the loss of about $90 million. But Steve Huffman, the CEO of Reddit, told us that in the back half of the year, they did show profitability, and he's outlining a plan to use AI to make their ads better targeted, more efficient for their ad buyers, and also to license their data to the likes of Google to generate new licensing revenue to train the Google AI systems. So one big question here in terms of the challenges is what the FTC does. They're investigating Reddit's data licensing practices. Now, Reddit says this isn't a problem, but analysts are watching this as a key area because they need to make sure that they really can indeed continue to license this data in order to create this new revenue
Is the
stream.
path to profitability here really goes through the advertising business, right? I mean, it's an advertising-driven
95% of their
company.
revenue now, 95% of the revenue is from advertising, and they're competing when it comes to advertising, not only with the likes of Snap and Pinterest, but also with Meta. And Meta is so much larger. Meta and Google are the digital duopoly here. We're seeing the rise of players like Amazon when it comes to digital advertising. Reddit has this challenge of competing with much larger players. What they say is that they have a very much unduplicated user base, meaning that advertisers can reach people on Reddit who they can't necessarily find on the likes of a Snap, Pinterest, or Facebook. So we'll see how that plays out. And then they also say that a lot of people come to Reddit with intent to buy. People might be asking questions on Reddit about what kind of car should I buy, what kind of electric toothbrush. And so it's a place to reach people when they're open to information about purchases. But that's going to be a key thing to watch here. And then as we watch revenue growth rates for all of these players, we're going to be very carefully watching their revenue growth rate for an indication of how much they're able to continue to convert advertisers.
Who were some of the biggest, I don't mean to catch you off guard with this, but who were some of the biggest shareholders that made money yesterday? I know that the founding family of Condé Nast, Advanced Publications, is one of them. Are there others that we would know?
Sam Altman. Sam Altman made quite a bit of money on Reddit. He was very briefly the CEO of the company. And so through that process, bought some shares. But Advanced, which is part of Condé Nast, has turned quite a profit because they originally invested just $10 million.
$10 million and now $1.4 billion
Yeah,
or
so
something.
this is a good thing for them at a time when the traditional media industry is certainly struggling.
Interesting story in the New York Times today about Reddit and how it transformed itself from the inside out, not by targeting individual Redditors or contributors, but by targeting subreddits, groups, and kicking them out to make it a less toxic place to hang out.
Yes, you really want to have positive information and positive content. You don't want to have anything toxic or inappropriate because that's very important for advertisers. Advertisers don't want to have their content near anything inappropriate. So what Reddit did is they really empowered their moderators. These are the unpaid people who are doing such important work on Reddit to pull out stuff that's false or that's offensive or that's hate speech. And so they really empowered them with more tools to make sure they were keeping the content on Reddit fair.
And I look forward to next week. You'll join me at
Yes.
2 o'clock all week long?
We'll be co-anchoring in the two together. I'm looking forward to it, Tyler.
Nice
Thanks.
to see you, Julia. All right, Julia Boorstin there. Coming up, whether it's using AI and robots in stores or dragging workers back to the office, corporate America looking for ways to drive productivity. Up next, we will look at the latest trends and whether they are heading us toward a productivity boom or bust. And speaking of tech, Apple coming off its worst day since August after being targeted by the Department of Justice. We're going to look inside the regulation playbook for the mega caps and why Microsoft may have just put on a masterclass for avoiding Washington's eye. The Exchange is back after this.
This is The Exchange on CNBC.
Alright, I'm thinking about taking a long, gang. I gotta be honest. Here. I'm thinking about the long. Shit. Maybe with some time. Man, see, the fucking queues have already ran, bro. They already ran. You're getting ready to come up into resistance. Well, we saw the divergence. You are getting your divergence here. With the news type shit. Man, that shit was kind of hard, bro.
Set.com.
Just trying to listen to it real quick, cause I thought it wasn't coming out until like the 24th, 23rd. I don't know why I had that date in my head.
Bullish
so.
settlement.
I'll take a copyright if y'all want to hear it. If y'all haven't heard it,
ITB construction ETF is up more than 5% on the back of positive housing data. Our next guest is turning to a completely different name in a different sector for what he calls a potential stealth housing play. And that is the electronics retailer Best Buy, also having a good week, helped by another bullish call from JP Morgan today. Joining us now for more is Anthony Chukumba, Senior Analyst for Specialty Hardlines Retail at Loop Capital. What do you see in Best Buy, Anthony?
So really what it comes down to is that Best Buy is the largest television retail in the U.S. They have about a third domestic market share. They're also the third largest appliance retail in the U.S. behind Home Depot and Lowe's. I estimate between appliances and televisions, that probably accounts for about 25, maybe even 30% of their sales. And so if existing home sales in particular continue to pick up, I think that will be really good for their appliance business. I think it'll be really good for their television business. And like I said, I mean, a lot of companies that are more sort of direct plays on the housing market, like think an RH, a Williams-Sonoma, even a Floor & Decor, they're trading at huge multiples right now. Best Buy, not so much. So that's why I identified Best Buy as a stealth housing market play.
It's an interesting pick, but and as you say, let's look at some of those other companies that are maybe more directly associated with housing, like an RH, like a Floor & Decor, Williams-Sonoma, and so forth. Do you see the upswing in the housing market benefiting them or not as much because they have a higher price to begin with?
Right. Yeah, I mean, so essentially that's my argument. It will certainly benefit them and, you know, quite frankly, probably much more directly than Best Buy, but that's already much more priced into those stocks. You know, just in the last few months, we actually downgraded both RH and Williams-Sonoma from buys to hold ratings, largely based on valuation.
Yeah, interesting. What do you see for the housing market this year? I mean, the numbers in February were quite favorable compared with January. Interest rates presumably are going to come down later in the year. That should be a bit of a help for housing. But there's still a lot of issues with inventory.
So I'm incredibly bullish on the U.S. housing market right now. Part of that is the fact that you are coming off of a very, very easy comparison.
What do you guys want down here? Bottom right. What do y'all want?
It's just based on the data we've seen, right? So we have had sequential improvements in existing home sales in the last 2 months. The 4.3 million units in February were the highest level since February of 2022. And this is all before mortgage rates really come down. So the 30-year fixed mortgage rate is still almost 7%. So yeah, we think that as the Fed starts to cut rates and mortgage rates come down in turn, that will lead to a significant acceleration in existing home sales, even from where we are right now. And to your point about inventories are slowly but surely getting better.
Well, that is good news. And you look at some of the fundamentals of the U.S. economy, they would favor housing. When you have wage growth coming in at plus 4% for many, many months, which has been the case, when you have things like jobless claims falling and the unemployment rate staying where it is. Housing is highly related to income and jobs, correct?
100%, 100%. And you nailed it. You nailed it right on the head. You hit the nail right on the head. I mean, you have unemployment less than 4%. We've had now, I believe it's almost 2.5 years, over 2.5 years of at least 4% year-over-year wage growth. The last 10 months has been higher. The wage growth has been higher than the rate of inflation. So consumer purchasing power is actually getting better right now. So yeah, I think there's a lot of tailwinds for better home sales in 2024.
All right, Anthony, thank you very much. Great to see you. Have a good weekend. Anthony Chukumba. Artificial intelligence and work from home are two of the biggest factors for companies looking to drive productivity from their employees. Today, we look at both and what kind of a boost they're giving America's workforce. Courtney Reagan, let's begin with you and see how retailers are using AI. Hi, Court.
Hi, Ty. Yeah, so automation, AI, other machine learning has really helped increase productivity for retailers in stores, which is often now also being tasked with fulfilling online orders. Tractor Supply has several AI tools, and they're designed to make their employees more efficient in stores, like its headset assistant, Hey Gura, which answers questions about products, inventory, and then helps employees with even their HR-related questions. And Badger Technologies, Marty the robot. It works in grocery stores like Stop and Shop and hardware stores to scan inventories and alert employees of hazards in aisles.
It's a great kind of phone a friend that you can have. And I think, as the team members start to use it and they become more confident in it and more reliant on it, I think it creates a kind of a war for talent opportunity for us or win for us. Because they might be hesitant to, leave to go to another job where they don't have such a tool.
But they improve their accuracy over 90% by freeing up over 40 hours a month of what the pricing coordinators have to do to check their pricing.
Home Depot's Sidekick app, it prioritizes highest value tasks more efficiently for the store associates. It's improved productivity by increasing on-shelf availability, associate engagement, and customer service scores. Sam's Club uses Brain Corp's autonomous inventory scanning and floor scrubbing robot. And Walmart is expanding its use of drone delivery with partner like Wing for faster delivery of these smaller items. Now I'm going to send it over to Kay Rogers for a look at increasing productivity from remote workers.
Hey there, Court. Well, productivity really depends on what type of job you have and what type of self-discipline that you possess. But on the whole, a research paper from Stanford on the evolution of work from home actually found that working fully remote is associated with a 10% lower rate of productivity than fully in-person work. Hybrid work appears to have no impact on productivity, but it's popular, of course, because it improves recruitment and retention, according to Steve Davis, who's one of these Stanford researchers. Now, separate data from Jobless found that younger workers are seeking in-office experiences these days at higher rates than other generations, at a rate of 57% versus about a third in all other generations. I spoke with two Gen Z workers earlier in their careers who say they actually prefer working in office for career growth opportunities, socialization, and of course, even productivity.
I think as someone who's pretty recently out of college, it's helped me transition into the workplace life more and just adulthood more, being with other adults.
I think being able to collaborate with your team is certainly a benefit of being able to go into the office. In my experience, collaboration was a lot more difficult when working remote. You don't really have that in-person ability to really walk up to a desk and ask the questions.
Now, as for the industries where people are most working from home these days, it's information, finance, insurance, and professional and business services, not TV shows, guys.
What do we know, Kate, about the ultimate productivity of people who work from home? Are they more productive? Are they less productive?
It's just a little bit around 10% lower if you're fully remote. Hybrid really has no bearing on productivity. It's kind of break even, but we do know it's great for attracting, recruiting, retaining people because people do enjoy that flexibility. And it can, if it's done properly, be a cost savings to some companies that they could reinvest back into the workforce.
Certainly helps people who might find it difficult to come into the office every day to actually hold a job and be productive.
And also what's interesting is that the Stanford research team found that the people who are most likely to want to work from home and who are most working from home these days, millennials with young kids, because they want the flexibility.
Totally. So, Court, where does this AI revolution take us in terms of workers and the demand for workers?
So that's such a good question, and I asked the CEO of Badger Technologies,
Smoke
which
the
is the
cartel.
one that runs
Look at
these
that.
robots
Smoke
that
Cartel
do these inventory
Incorporated.
scans and also help for hazards in the aisle. And he says of the retailers that he's worked with, no one has laid off employees as a result of it. They've just shifted their tasks, especially because retail has gotten so much more complex, and workers are being asked, especially in stores, to do so much more. Help customers in person, but also maybe fulfill an online order. So if they can take away tedious tasks like writing down how many bottles of Tide are in any given aisle or cleaning up a bottle of Tide when it falls over, they can serve the customers more. And that sort of helped them also like their jobs more and retain people. How a lot of Tractor Supply was talking about how their talent retention has really increased since they've introduced a lot of these AI tools to make their jobs easier and frankly take away the more tedious tasks.
We had an interesting conversation with Aaron Levy of Box the other day, and he had this hypothesis about how AI is going to affect the workplace headcount. And he said in the early stage, it may reduce it. But in the longer run, as AI increases productivity and companies make more profit, they make more money, they grow faster as a result of profitability, that will mean that they will invest back in their business and expand and ultimately probably hire more people.
Yeah, I think that is really fascinating. And I think a lot of times in retail, at least when we're talking about automation, a lot of the focus is in the warehouses or the distribution centers. And I think in those cases, some of that automation can replace workers. But I think what I focused on was the automation that's going on in stores. And that is really helping the workers. But I understand Aaron Levy's point.
I would also just add to in covering the restaurants, which is obviously another service sector type of a job. Same thing. Chipotle's been a great example of a company that's using the avocado, for example, that's prepping the avocado. So that's a repetitive task that's tough for workers. They don't necessarily enjoy that the way they would with like interfacing with consumers, for example, and it makes their job easier. So what does that do for, attracting, retaining people down the line remains to be seen, but it's interesting and they're testing it out. So we'll know soon.
Avocados, you can't really interact with an avocado.
I mean, I try to talk to them.
Yeah.
They
They don't
it's
really.
a plant. Really gets them to like grow and ripen faster.
They don't laugh at my jokes.
They don't have service problems.
They don't ripen faster when you talk to them?
No, unfortunately not, but we'll see.
Enjoyed having you here. Good to have you here this week, Kate. Nice to see you. Court, thanks. All righty, still ahead. Senator Warren calling on the SEC to investigate Tesla, its board of directors, and CEO Elon Musk over governance issues. We'll tell you what she's worried about and whether investors should be concerned. And obviously, Elon Musk doesn't seem to be with that big grin. And as we head to break, take a look at shares of Lululemon plunging after posting weaker than expected guidance as demand slows in North America. Shares having their worst day since the start of the pandemic, down 70 a share. The exchange is back after this.
Welcome back to The Exchange. I'm Pippa Stevens with your CNBC News Update. Republican Representative Marjorie Taylor Greene filed a motion today to remove Mike Johnson as House Speaker. Greene said to reporters that the motion was, quote, more of a warning than a pink slip. It comes as the House passed a spending bill this morning to avoid a government shutdown. Secretary of State Antony Blinken met with Israeli Prime Minister Benjamin Netanyahu in Israel today, where he discussed options for Israel's ground operation in Rafah and reiterated the urgent need for aid in Gaza. As he departed Israel, Blinken said the offensive would jeopardize the country's standing and long-term security. It was the last stop of his 6th trip to the region since the start of the war between Israel and Hamas. And after yesterday's surprise defeat of number 3 Kentucky and several other high-seeded teams in March Madness, less than 1% of all brackets are still alive. But if your Atlanta Falcons running back Bijan Robinson, the NCAA X account said his entry was one of only a few left with a chance of a perfect bracket. Tyler?
I'm going to jinx myself. I did pretty well yesterday.
Okay,
I have
right.
3 brackets working. A couple are in the 70% area, and one is a little higher than that. So I'm feeling very proud of myself right now. Pippa, thank you. Coming up, can Apple take a page out of Big Tech's regulation playbook as it deals with the Justice Department's new antitrust suit? That one is next when we return on The Exchange.
NBC.
Welcome back, everybody. The Department of Justice, massive news suit against Apple, just the latest regulatory battle facing big tech. There's also the FTC facing off with Amazon and Meta, and the DOJ against Alphabet. But one mega cap that seems to have dodged scrutiny so far is Microsoft. Not that they haven't been in the target hairs before. Deirdre Bosa has that story in today's Tech Check. Hi, Dee.
Hey, and that is key that they have some experience here. But fast forward to today, 2 key pieces of the AI arms race, technology and talent, very interconnected too. And Microsoft is collecting on both fronts, all while dodging the regulators. And it turns out that that could be their edge. Just look at this week. Apple was hit by that giant antitrust lawsuit. Microsoft poached Inflection's top talent while seemingly appeasing its investors with a large licensing fee. As you mentioned, Google, Meta, Amazon, they're already under scrutiny by the DOJ or FTC. So why does Microsoft seem to be avoiding the regulators better today? Well, it may have something to do with that past experience. Microsoft President Brad Smith, he was there during the antitrust lawsuits of the late 90s and the early 2000s. So he has experience, and he may now be structuring current deals like its $13 billion cumulative investment in OpenAI in ways that sidestep the type of scrutiny that an all-out acquisition would potentially invite by the regulators. Now, Google wants Ruth Porat to play that role at the company, but nearly 8 months after announcing that she would become president and communicate more with Washington, they're still searching for her CFO replacement. That hasn't yet happened, but you touched at it at the top, Tyler. It is about that experience, and Microsoft is proving to be very adept at playing the regulators while accumulating all of this talent and technology from the AI darlings.
It's kind of interesting to me, Dee, that as I think back on the history of Microsoft's brush with antitrust, it was more than a brush. That understates it by about a factor of a million.
Yeah.
But it really had to do, as much as anything, with, correct me if I'm wrong here, sort of a similar thesis.
Y'all looking at Tesla or what?
Bringing, or the
I try to tell them.
Bringing against Apple. In other words, the idea that Microsoft, way back when, was trying to create a closed ecosystem where everything was tied into Windows. You got Windows, then you got their browser, you got their email.
She's ready for the weekend, I can already tell.
Walled garden, which is kind of what the antitrust regulators are accusing Apple of.
So yes, the walled garden is a common theme. However, as
but
many
yeah,
people
y'all, what'd I say?
point
What
out,
time is
especially
it?
here
Oh,
in
funny. It's a
the numbers
1:40.
are very, very different.
All right, I told y'all they was gonna try to run this shit up late in the day. So don't none of y'all get paid.
Less than 60%.
So y'all don't get paid.
I think about 58%. So
It's
Android
crazy, bro.
is, a reasonable competitor here, but it is about that ecosystem. You're right. Let's look at the implication, though, right? What happened when Microsoft was dealing with those lawsuits back in the late 90s, early 2000s? Essentially a lost decade. And that's the fear here, that whether or not this lawsuit is right or wrong, what happens is that it will amount to a distraction for Apple at this really important time when it's trying to convince investors, users, that it has an AI strategy and proposition. So where does that go? This is the most important platform shift. Does Apple risk falling further behind?
Yeah, very interesting. It's going to be interesting to see what happens with those suits. And certainly if there's a change in administrations in Washington, what happens with some of those antitrust suits.
Good point.
Anyhow, Dee, thank you very much. Have a great weekend. Shares of Tesla, meanwhile, under pressure after Massachusetts Senator Elizabeth Warren once again asked the SEC to investigate the company, Elon Musk, and the company's board over governance issues. This as Tesla trims production in China as sales growth stalls. Here to discuss is Dan Levy, Senior Equity Analyst at Barclays, along with our own Phil LeBeau. Why don't you start off, Phil? What do you make of Senator Warren's letter first to the SEC?
Not new arguments, similar to what we've heard from her in the past when it comes to Tesla, Elon Musk, and the governance of Tesla, the board of directors. She says there's a financial conflict of interest, there's a lack of oversight, a lack of disclosure, and as a result, shareholders are hurt because of that relationship. Not surprisingly, Elon Musk, and he's heard this before, he tweeted out today, it seems like Senator Karen, and that's what he refers to Senator Warren as, Senator Karen is getting her cues on this complaint from SBF's dad, SBF being Sam Bankman-Fried. He has long said, look, Sam Bankman-Fried's father advised Senator Warren's staff in the past, and therefore she's taking her cues from him. So we've heard these concerns from Senator Warren in the past regarding Elon Musk. I'm not sure that the SEC is going to do something specifically because of this letter, but we have heard this from her in the past.
Yeah, no fan clearly of Elon Musk, and the no fanism is reciprocated. Dan Levy, let's turn to you and talk more about the business of Tesla right now. How's it going, and what are their plans to overcome this slowdown, which is not just in the U.S., but more globally in EV sales, in China, for example?
Hey, hi, Tyler. Thank you so much for having me.
Sure.
Look, we are in the midst of what we call, or what many have called, an EV winter. We're looking at EV sales that have certainly slowed. There is still growth, but it's certainly a reset on the growth expectations. And when you look at it regionally, China is still humming along, but in a place like Europe, we just revised our forecasts to basically flat year-over-year growth or slightly above that. And when you look at Tesla, Tesla is certainly at the prime. So they're going to be reporting 1Q deliveries the next week, or in a week plus. And we think that you're going to see some of those impacts of the sort of EV winter, slowdown in China, impact from the roll-off of subsidies in Europe. And this is certainly questioning the pace of growth for them going forward. We're looking for something in the 420 to 425 range. Some of the data points we heard out of China imply some downside to that that came out this morning.
So 420,000 to 425,000 units in that first quarter. The consensus is a little higher, 468,000. So a modest sort of cut there from Dan. Phil, why are electric vehicles losing their popularity?
Depends on the market. Look, they're still growing in terms of sales, Tyler,
but not as fast.
What you have, let's talk about the United States. You've got two major headwinds going on right now. One of them is pricing, and yes, Tesla fans like to say, well, look, you can buy the Model 3, and with the government incentive, you can get it down in the $30,000 to $35,000 range. But the fact of the matter is, the average transaction price for Teslas and for all EVs is higher than that. And there's just not a lot of options across the board for the entire industry when it comes to EVs that are moderately priced. And then the other headwind that is out there here in the U.S. that really bothers a lot of people considering going electric is the lack of a public infrastructure when it comes to charging, a reliable one. Yes, you have the Tesla supercharging network, but separate from that, Tyler, you don't have enough chargers, and they frankly don't charge fast enough. I think a lot of people are increasingly saying, if I'm going to charge up a vehicle, I do not have hours on end to spend here. This idea of have a snack and wait for it to be charging, that's not going to fly with people when they're looking at buying an EV.
Boy, I really agree with you on that, Phil. As people may or may not know, I have an EV. I happen to have a Tesla in the interest of full disclosure. Their supercharging network is good. It is pretty fast, but other chargers are way less fast. And even the home charger that I use takes a couple of hours overnight. Dan Levy, how would you answer the question I just asked Phil? How do you explain the idea that while they are still growing, EVs are, that growth has slowed? Why is that? Phil nailed it?
I agree with Phil. I think that it is an affordability issue. Prices are on a like-for-like basis at a premium versus ICE. I think that what Phil's talking about, this issue with charging, this is part of a broader issue of transitioning from the early adopters to the early majority. And so you are seeing some questions on the use case. I think you see a very different story regionally. China EVs are dominating, so that was a clear source of upside. We've seen in the last few months as high as almost 40% EV penetration. But when you look at Europe last year, Europe was basically flattish on EV penetration. In the US, it's still roughly 10%. I'll just point out one other aspect here. Just remember, especially in the US, so much of the EV story is Tesla. Part of Tesla's issue is that it's a very concentrated lineup. There is 5 paint colors. There's really 2 dominant models. And so there's only so much option. The other automakers that are putting out other models, the issue they have is they can't keep up with the cost. The cost is just too overbearing. So when Tesla is cutting prices, the others can't cut prices. And this is why you have some challenges.
It was at this moment when he knew.
EV uptake and EV penetration.
Fascinating stuff. We'll be talking about this
He
for
fucked
another
up.
decade and a half, long after I'm out of here. Dan, thanks very much. Phil LeBeau, thank you. Appreciate it.
Thank you.
All righty, folks, coming up, it was a big week for IPOs with Astera Labs and Red.
Whoa. Hold up. Y'all see this? Hold on. Yeah, I'm trying to listen to the new Future album. Bro, what's going on here? Did somebody run a red light or what? Left green arrow. What the hell? What is this, gang? What is that? Hold up. Am I new to California laws or something here? Wait. Look, red. Left arrow red. Like, nah, bro, you ain't making a left right here. Okay. Left arrow red. Green. Is this AI, dog? Or is this AI? I don't think it is. Wait.
When these business owners need cash fast, they turn to Biz2 Credit to fund what's next. From fitness studios to medical offices and every small business in between, we've got you covered. Whether you need new equipment, funds to expand...
Look, yeah, and there's a red light right there.
Biz2 Credit is the trusted partner for your small
That's funny.
needs. Scan the code on your screen now or go to biz2credit.com to apply. Biz2 Credit, funding what's next.
There are certain things you can do in a house that will last for the ages. TimberTech decking is one of those things. It was an obvious choice for all of the things that we wanted: appearance, durability. There is no other choice. It's that good. We decided to put it in an in-ground pool.
I literally went on Angie and typed in pool.
Get different contractors, see different bids.
We wanted something beautiful. We wanted something that our children would feel happy swimming in.
And we love it.
Get started today at Angie.com.
Your skin is ever changing. Take care of it. With Gold Pond's age-warming formulations of 7 moisturizers and 3 vitamins. For all your skins, Gold Bond.
Oh, we got a news alert now on Apple, and Steve Kovac has it. Hi, Steve.
Hey there, Tyler. Yeah, we have a report here about another research and development project being cut at Apple. This is coming from a Bloomberg report published moments ago.
Come on, bro. Stop with the noise. That is crazy. You getting hit with left and right. People running red lights, dirt bikes, everything. Just it's crazy out there, bro.
Gold Bond.
Oh, we got a news alert now on Apple, and Steve Kovac has it. Hi, Steve.
Hey there, Tyler. Yeah, we have a report here about another research and development project being cut at Apple. This is coming from a Bloomberg report published moments ago. Apple is cutting their Apple Watch display unit. So this is a unit that was researching how to make in-house displays for the Apple Watch instead of relying on suppliers like Samsung and others. We've seen Apple do this with multiple products, most notably the chips that they put in their Mac computers, ditching Intel to use their own chips, and also seen some failures here too. For example, trying to make their own modem instead of using Qualcomm's modems. And then, of course, just a couple weeks ago, the cancellation of the Apple Car project, which resulted in the cancellation of that project, and about 1,000 jobs were at risk for here. Here it sounds like there are going to be some layoffs, but it's a much smaller group than the car project was. But still, you see Apple shares here still up slightly after falling about 4% yesterday on the antitrust case from the DOJ. Tyler.
All right, thank you very much, Steve Kovac. Appreciate that. Coming up, shopping on social media ramps up. Drugstore skincare is all the rage, and Facebook's Pokey feature is back. A look at the hottest trends among teens and tweens and the companies that are capitalizing on them. That is next.
Bro, Q's just took off. So you're seeing them buy the dip on semiconductors. You saw it firsthand right now today. They bought the dip.
seconds left. Florida Atlantic, 3 seconds, 2 seconds. What's he doing? Davis, blocked at the buzzer, overtime. Why would he stop? Blew by. 6 seconds left. Florida Atlantic, 3 seconds, 2 seconds. What's he doing? Davis, blocked.
People asked for it, and the market delivered it this year so far in terms of broader participation. You mentioned it's like a year's worth, an average year's worth of returns in 3 months, but it's also true that in bull markets, it's actually rare for 12 months to give you 8 to 10%. Usually kind of overshoot to the upside. You get, the S&P's been up more than 20% in a calendar year, like 3 times as often as it's been down 10%. So I guess the question is there any reason that you would want to be rebalancing away from what has been winning already and looking for still other things that haven't yet quite caught a bit?
You know what, how we've been allocating is, I would say we have our core kind of down the fairway S&P exposure, but really barbelling that with technology and then companies that have a high free cash flow yield. And whereas last year it was really just the NASDAQ and that free cash flow yield, I think they're like 9 or 10%. You're already seeing those types of companies, which actually are more value biased, do really well this year. So we're going to stick with what's working, having that core S&P exposure with a barbell around tech and then free cash flow yield. I think that's going to continue to be a winning recipe.
In terms of some of your core holdings, I know you do own Apple, and it's about flat for the week, actually, even though it did have this big wobble and is relatively underperformed after the Department of Justice suit, the news out of that yesterday. What's your read right now on maybe not just the merits of the case, but how Apple finds itself right now having to persuade investors that it can kind of clear that hurdle, but also prove that it's going to re-enter growth mode?
Well, I mean, re-enter growth mode has been a question for some time. And I think the reason why you have a premium on the stock is like a Costco, like a Procter & Gamble, their earnings are very durable and stable, and they have such a huge installed base. Apple's down, 10% for the year. And so I think it's less about this DOJ, but more about they don't have an AI story, which is fine, but that's like exciting for investors. And I think that we're really going to have to wait 1 or 2 cycles, I think, to get people really wanting to upgrade. And then if you want to talk about, the DOJ suit, I think it's not even nearly as explosive as it could have been once I read through it.
Okay, so you don't think that? Well, I was interested to see the fact that the stock did go down 4% on the news. In other words, everyone's looking at the same details. It seems the kind of thing we thought that the authorities might scrutinize and try to contest, and yet the market sort of backed away.
Right. Well, it's kind of, it's interesting if you just even skim through it. It seems like, I mean, there's multiple points, but to me, they're having issue with Apple because in order to watch, I mean, this is their quote, high quality videos, you have to buy a very expensive phone, which that doesn't make any sense. It's like, well, it's expensive because it gives so much value. And then, they don't like the Google that when you text from an Android, it turns green. And they're very competitive, but to me, this is not a Microsoft case like we saw in the early 2000s or late 90s with the Microsoft, which I think had so much teeth and meat and really put Microsoft back years and years. And by the way, allowed other companies to go forward. I think this is going to last a while, but I don't think it's going to be a hangover on the stock very long. I think it's more about the AI story and the refresh of the Apple phone. When's that going to be? And how many people are going to upgrade, to me, is what you need as a catalyst to get the stock above that 250 or 100-day moving average.
Right. Yeah, it has been sort of technically sort of compromised a little bit. Finally, also another word on Tesla. You've owned it for a while, various levels. It's obviously been under a lot of pressure, and it's mostly about volumes and pricing. It's not necessarily a lot of the ancillary stuff. So what's the path out, if there is one, for that name?
Well, there's always a path out, right? And so I think that I never want to underestimate Elon and his team. They continue to iterate and evolve full self-driving. I think that in the U.S., they're going to continue to dominate the EV. But really, Mike, it's China. China is the axe in the EV market. They have a ton of competition from BYD. I think you need a catalyst to get investors excited about the story again, because right now, what's not exciting is that their earnings growth is looking this next quarter to be down 25% year over year. Those types of important metrics are going the wrong way. And I think until you get stability in earnings and revenues, you're not going to have new money come into that stock because it's too big of a company to not have the earnings growth behind it in order to catalyze it to go higher.
Yeah, it's obviously been sort of trapped in that gravity field for a little bit. Bryn, stay with us. Let's bring in Scott Wren of Wells Fargo Investment Institute and Ed Clissold of Ned Davis Research to the conversation. And Ed, I'd love to just get your sort of current checkup on the bull market, how it's acquitting itself, and what do you think we have in the way of fuel left in the tank in the immediate term?
Yeah, big picture, things are in pretty good shape. Recession risks are low, and historically, you don't get non-recession bear markets this close to the one we had in the end of 2022. So it's really about, are we setting up for a near-term correction? So there are some ingredients in place. We've gone 100 days without even a 3% pullback in the S&P. The last time we went that long was ended in January of 2018, right before the Volmageddon incident with the VIX ETNs. So we're overbought. Our sentiment composite is showing lots of optimism. We've gone 16 weeks of excessive optimism. That's like the 5th longest on record, going back to 1995. So the ingredients are there. Is there a downside catalyst? We could all kind of hypothesize about, if yields spike, if the Fed changes course, if we get some downward earnings revisions, those could all be catalysts. But we need to think in terms of a healthy pullback within an ongoing bull market.
Gotcha. Yeah. So you got the atmospheric conditions, but we don't know if it's really going to develop into anything. And then I guess your work would suggest whatever comes on the way of a pullback, it probably wouldn't be the big one. So I guess reassuring. So Scott, how would you think about things here? I know you're looking at the possibility for maybe a little bit more downside, or at least not the most favorable risk reward here.
Yeah, I tell you, Mike, I don't think the risk reward is that favorable. And certainly, stocks have made a gigantic move since the October 27th low. We're not chasing the S&P 500 from these levels. And, stocks are expensive, but, as the tech bubble back in 2000 showed, they can get more expensive. But what we're trying to do is look under the hood a little bit. And really, if you look back, whether it's calendar year 23, whether it's the last 12 months, tech looks expensive to us. Communication services look expensive to us. There's been some headwinds in the consumer discretionary sector, which you just talked about. But for us, we're trimming from those sectors, and this has been over the last few months or so. And we've been buying things like materials, industrials, energy. And if you look over the last 6 months, those have not been outperformers. But if you look over the last month, you'll see materials, energy, industrials in the top 3. So I think things are starting to turn. We want to be overweight large cap, underweight small. We don't think it's time to buy the Russell 2000 or anything like that. We want to be overweight U.S. Relative to international. So there's been some things that have worked as the market's gone higher than what we initially expected it to. But certainly, to have a 5 or even 10% pullback from here, I mean, that's not a bold call in any stretch at all. And so we're looking for some volatility here. I think the market's been comfortable that, we're not going to have, 6 or 7 Fed cuts this year. And I think, surprisingly a little bit, the market's starting to get comfortable that we might not even have 3 cuts. So, I think the market's running on momentum here. There's a lot of people that are kind of getting into the market. I don't sense that there's a lot of chasing going on. Certainly money managers who have the S&P as part of their benchmark, can't be sitting on cash and watching this thing set records every day. Traders, they're going with the flow on a daily basis, but on a retail sort of basis where we know there's a lot of cash on the sidelines, I don't sense a lot of chasing so far. So we could see a little bit of upside here, but I think you need to be cautious on just jumping in and buying the S&P 500 here.
Yeah, I guess it depends where we're looking. I mean, if you look at the real high active trader retail segment, yeah, there's been some chasing. There's been some, some wild moves in the options market and things like that. But in terms of, I guess, the overall retail base, yep, a lot of cash still in those accounts. Ed, when it comes to the pace of rate cuts, I know you've kind of said for some time that actually fewer cuts might be better for the stock market. Now, the market maybe is showing us that, but why would that be the case?
Yeah, so what we did is we looked at historical rate cut cycles. We said, well, let's say the Fed is cutting very quickly, 5 or more cuts in a year. Well, actually, the market's done much worse under those scenarios than when the Fed's cut 4 or fewer times in the year. And the reason is when the Fed is cutting quickly, it's because they've already made the mistake. They're chasing their tail, trying to prevent a recession, and usually doing a pretty poor job of it. So the move from calling for the Fed funds futures looking for 7 cuts to now 3, maybe 2, that's actually moving into the better situation of a slow cycle. The Fed moves slowly because it can. So you think about the last few times that happened, say in 84, 95, 2018, those kind of slow cycles tend to be positive for the market. So yeah, this is actually a better setup than what the futures were pointing to earlier in the year.
Yeah, do want to mention we do have a little bit of a deeper pullback. The Dow is mostly leading to the downside. A lot of that is Nike. And Bryn, obviously Nike's had its issues, but there has been some spotty guidance from consumer companies. It hasn't always been about, the consumer's very healthy. It's been a little hit or miss. How does that fit into whatever thought you might have in terms of where we are in the cycle and where you'd prefer to look within the market?
I think on the consumer side, these earnings are idiosyncratic. I mean, I feel like Nike is China. I feel like Lululemon, it's like there's a lot of other brands out there and tastes change. And so I think we still have, we can look at the credit card data that's moving up, credit card delinquencies. But don't forget, Mike, it's like a strong jobs market equals a strong consumer. They are one and the same. And so until that jobs market, we start getting higher unemployment, which I don't think anyone sees that, the consumer is going to stay relatively strong. And so I would really pass that off to more idiosyncratic specific companies than a broad brushstroke on the retail consumer.
Yeah, and Scott, I was struck, but you think that maybe there's going to be some slowdown risk, I guess, but yet industrials, materials, you prefer it. It's this tricky place in the market where if you want to look at some things that appear that, they're well positioned with earnings revisions and things like that, you kind of have to be making a bit of a macro call that the economy is going to hang in there, don't you?
Well, you kind of do, Mike, and for us, I think as far as the energy call, oil, we don't think it's going to trade much below 70. That's why we're favorable on energy there, because we still think there's some supply issues out there. And then really, if you look at materials and industrials, they're benefiting mightily from all this infrastructure spending that's going on, and whether it's who's going to be the next president or what the economy does here in the short term over the next couple of quarters. There's going to be a lot of infrastructure spending that's in the books, that's going to be introduced, that's going to go on. And so I think those sectors, normally this might be a little early for those sectors to be outperformers. But, given the stimulus, this deficit spending that's going on that, clearly isn't going away anytime soon, I think those have been more favorable than they normally would be. And that was kind of our thesis behind trying to get behind those sectors.
Yeah, example number 4,000, that this cycle hasn't really been synced up to what we might have been used to
right.
in terms of reading all the signals. Bryn, Scott, and Ed, thanks very much. Appreciate it. Have a good weekend. Let's send it over to Christina Partsinevelos. Thank you for a look at the biggest names moving into the close. Hi, Christina.
Hi, Mike. Well, FedEx is a top S&P 500 gainer today, even though it posted its 6th quarter of year-over-year sales declines, which the company blamed on lower fuel surcharges and decreased shipment volumes. But the company beat analyst expectations thanks to stringent cost cutting. The logistics company also announced a new $5 billion share repurchase program and promised to keep trimming spending for the rest of the year, and that's why shares are up over 7%. Shares of Digital World Acquisition Corp are off earlier lows, but still down about 10% after the shell company's shareholder approved a merger with Donald Trump's social media company, Trump Media. The newly merged company, Trump Media, could begin trading under the new ticker DJT as early as next week. The former president holds a majority stake in this new firm, which could be worth billions of dollars if it regains that 10% loss that we saw today.
All right, yeah. Very tricky situation. Christina, thank you. We're just getting started here. Up next, former Dallas Federal Reserve President Robert Kaplan is here. What strategy he thinks the Fed should be taking and where he sees inflation heading from here. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC. Welcome back. We're getting some news on the IPO front on a Friday afternoon. Pippa Stevens has that for us. Hi, Pippa.
Hey, Mike. Ibotta has filed to go public. The company said in a filing today to trade under the ticker IBTA. Now, this is a digital software marketing firm that is backed by Walmart. And back in November, there were reports that it was valued at as much as $2 billion. Goldman, Citi, and Bank of America are handling the IPO. Mike?
All right. Yep. I guess the window is open. Pippa, thank you. All right, the Dow pulling back from its record high, still heading for its best week of the year, though. The major averages all on track for healthy gains this week following Wednesday's FOMC meeting. Chair Powell reassuring investors that rate cuts are likely on the way. Joining me now to discuss is Robert Kaplan, former Dallas Fed president. He is also former vice chair at Goldman Sachs. Robert, it's great to see you. It's interesting the market had, net positive reaction, considering that the statement and message were almost identical to what we saw last time, right? So in other words, not much change in the Fed stance. It feels as if policymakers are wanting to make use of the luxury of time to maybe allow inflation to get a little bit better. But what did you pull out of what Chair Powell had to say that's most relevant to the outlook?
I'd say the statement, his comments were pretty much as expected. He's setting up the option to cut in June, but leaving them flexibility in case they don't like the information and data they see over the next few months. I think he reaffirmed what they said back in December. But I think the Fed's going to want to turn over a few more cards, and he gave them the flexibility to do that. The market may also be reacting to his comments on the balance sheet, which actually may be more significant for the market in that it's clear the Fed is moving toward slowing the runoff of the balance sheet over the next few months. And I think that actually might be as or more significant than the statement and the comments on interest rates.
Right. So I guess he said essentially soon that they will likely have a plan for tapering the quantitative tightening. And perhaps that was a little bit sooner than people were expecting that to be on the radar. Seemed as if maybe the market did take a little bit of heart in that. But bigger picture, it feels as if the Fed, the committee is pretty wedded to this idea that there's just a lot of room between where rates are and where inflation is, even if it's not near target. So almost like there's an urgency maybe to get started as a matter of just, normalizing, getting that process going, even if it's not really to explicitly help the economy.
Yeah, listen, the Fed is very mindful of the fact they probably were late this cycle in raising rates and starting to run off the balance sheet, maybe as much as 20 months late. I think they're now thinking about the fact they don't want to overstay keeping rates high for too long. The issue that's making this more difficult, though, is you still have very substantial fiscal spending on unspent ARPA money, American Rescue Act money, Inflation Reduction Act projects, Infrastructure Act projects, which are stimulating demand for labor as the Fed is trying to cool demand. And I think that's creating resiliency, particularly in the service sector and on wages. On the other hand, you've had a couple of positive developments. You've had more labor supply growth, probably from immigration, and productivity looks like it's a little higher, which means maybe we can grow a little faster with lower inflation. But these are cross currents, and I think it's still unclear which of these cross currents is going to be more dominant, which is why they're kicking the can at least a little bit longer.
Sure. I guess there's even another overlay on all those cross currents that you mentioned, which is the parts of the economy that would or are most responsive to higher interest rates to restrain inflation are the goods part, the housing. It's the stuff that's already maybe felt the effect, right. Whereas it's just unclear if services inflation can be, addressed in a similar way by keeping rates up here.
Yeah, that's right. I agree with that. So it's not like tight monetary policy isn't working, as you just said. It's affecting real estate. It's affecting the desire to keep inventory. It's affecting banks' willingness to lend to small business. So it's having an effect. The issue is there's a counterforce, which is fiscal spending, deficit fiscal spending on projects, which is resilient. It's not stopping goods disinflation, but it probably is making service sector inflation a little more resilient. And so the Fed is getting ready to take action, but it's not committing to it by any means. And I think they'd be wise. And if I were there, I'd want to withhold judgment for a little longer just to see how this is all going to shake out.
Yeah, no, they're probably glad to have 2 or 3 months before they're expected to do anything whatsoever, just to see how things shake out. Robert, great to have you. Thank you very much. Robert Kaplan.
Great to see you, Mike.
All right, we're getting some news on AI startup Anthropic. Kate Rooney has that for us. Kate?
Hey, Mike. So you may have heard of that AI startup. It is the hottest tech investment out there right now. I spoke to 3 sources who tell me a stake in Anthropic is being shopped around to sovereign wealth funds, but Saudi Arabia notably will not be one of those new investors. Anthropic has ruled out taking any money from the Saudi Public Investment Fund, the PIF as it's also known. That is despite the Saudis' interest in technology investing and more than $900 billion in assets it has to spend. Sources tell me that Anthropic has privately cited national security risks. This stake in Anthropic is for sale because it belongs to FTX, the failed crypto exchange. It's being offloaded as part of that bankruptcy. FTX invested 3 years ago for around $500 million. That stake is now worth more than $1 billion after this recent boom in AI. The sale, I'm told, is still ongoing. The proceeds will be used eventually to pay back FTX customers. Perla Weinberg is the banker in this process and declined to comment in this story. Anthropic has raised more than $7 billion in the past few years from tech giants, including Amazon and Alphabet, Salesforce as well, amid this AI frenzy. Its large language model competes with OpenAI's ChatGPT. These are Class B shares that are being sold at the same valuation, I'm told, as the company's last financing round, which a source tells me was $18.4 billion. And while the founders of Anthropic preemptively told bankers that they would not accept Saudi money, they do not plan to challenge potential funding from other sovereign wealth funds out there, including the United Arab Emirates, Mubadala, that is the UAE-based fund that is now also actively looking at investing. It's according to one of the people that I spoke to. The potential buyers of FTX's stake are also made up of this syndicate of new investors. A source tells me. I'm also told that Amazon and Alphabet are not increasing their holdings through this particular stake. Anthropic, the PIF, and Google and Amazon all declined to comment. Mike, back over to you.
All right, $18.4 billion current, or at least most recent valuation, Kate. I mean, in the grand scheme, with all the kind of big numbers being thrown around, AI capacity, it seems like a modest number.
I was going to say, you can see that as a discount, depending on how you look at it. It is. And it's also interesting seeing kind of the makeup of the potential investors who've typically had sort of these big tech investors on the cap table. It would be fascinating if you started to see more sovereign wealth and also these individual investors. There's money being raised through special purpose vehicles as well. So you have smaller investors trying to get in. So you may get a little bit more diversity on the cap table with this FTX stake being sold, Mike.
Interesting. Kate, appreciate it. All right, up next, investing with artificial intelligence. Generative AI has made its way into the world of finance and is shaking up how investors are approaching managing their portfolios. We'll speak with the head of one investing assistant company about how this could impact the market and your money. We'll be right back.
Incredible.
Welcome back. While generative AI has become the defining narrative for the tech sector, it's also making its way into the world of finance as a tool for individual investors to manage their portfolios. Here at Post 9 is Vinay Nair, founder and CEO of Tiffin, the company behind the AI investing assistant Magnify. Vinay, great to see you.
Likewise, Mike. Thank you.
Give us just a quick snapshot of what the service is and what makes it AI. What does it enable an individual investor to do?
So, Mike, we have a collection of AI assistants at Tiffin. Magnify is one of them, which really helps an individual investor bring together all their accounts, all the self-directed accounts. In the US, there's more than 25 million people with more than one self-directed account, and ask questions, get insights, get suggestions. I'll be specific. Sometimes people come and ask us, what happens if I buy NVDA? Or, for example, how much Apple do I hold? Because they exist within funds and indices and positions and multiple accounts. Or we find people come and ask us, what happens to my portfolio if rates go up or emerging markets drop? The early investors often ask us, how do I retire early? What is a plan I can put in place? So essentially, it's a decision support system, a guiding tool, if you will, to make better decisions for investors.
How is it different from what might have been out there already, which is some kind of a recommendation engine or some profile that you would just sort of have in your accounts that says, you know, do my risk weightings and all the rest of it that you might have been able to do for a while?
It's a great question. And in some cases, the question hasn't changed for the investor. They want intelligence. Right. And intelligence wasn't delivered in many places. The brokerage account, the advised account, the workplace account. So we have AI assistants for these places where money sits. Think of it this way. Back in the day, you had a paper map, which you looked up and took a pen and mapped out your journey and you went off. Today, we have a GPS system that real-time adjusts things. You can take a turn, it'll adapt to it. So this is a conversational interaction where it'll give you options. One could be a scenic route, what could be a fast route. You take one and it'll adapt to that in a back and forth manner.
About a decade ago, I remember, you know, the big wave was robo-advisors, so just a software-based, you know, advisory service, which is instead of perhaps a human financial advisor that you could just plug into and it went on autopilot and it would adjust over time. It obviously, those have grown, but it has not really displaced individual financial advisors very much. So how does your sort of set of services fit in?
We don't believe that financial advisors are going to be displaced anytime soon. Essentially, we believe that individuals will have money in three places: the self-directed account, the advised account, and their employer account. And intelligence will seep into all these three places using AI assistants. Advisors are using AI assistants also to get better answers. Effectively, all this together boils down to what is inevitable, which is better advice for more people. That's what AI assistants are enabling.
And just quickly before we go, does somebody just subscribe to the service, or do you have an account with Magnify, say?
No, you go to magnify.com and you subscribe just like you would subscribe to a streaming service with monthly subscription.
And then you just plug in your information. And
that's right. You can connect to your accounts, get answers.
Great. Vinay, thanks for coming by. Appreciate it.
Thank you.
Interesting stuff. All right, up next, we are tracking the biggest movers as we head into the close. Christina, standing by with those. Hi, Christina.
Well, the CEO shakeup at Papa John's getting a price target downgrade for the stock, and Dutch Brothers selling some more shares. Details on those stock movers next.
$1 trial.
20 minutes till the closing bell. The Dow down about 250. The other indexes just below the flat line, all set for weekly gains of better than 2%, though. Let's get back to Christina for a look at the key stocks to watch.
Well, let's start with Papa John's shares. They're down about, 3% after Bank of Montreal lowered its price target of the pizza chain to $80 from $90, although they still maintain an outperform. The stock is actually almost 4% lower. The analyst was surprised by Papa John's CEO Rob Lynch's departure, which was announced yesterday. Lynch had been with Papa John's for almost 5 years, but his departure adds to the growing list of C-suite departures like the CEO, the COO, the CFO, the chairman of the board. The list continues. And this comes as the company is facing market pressures, competition from Domino's, and also questions about franchise economics. And from pizza and burgers to coffee, shares of coffee chain Dutch Bros are down about 6% after announcing a secondary public offering represented by TSG Consumer Partners. The selling stockholders want to sell roughly 8 million shares, priced at $34 a piece. Shares are now $33.47. Mike?
Christina, thank you.
Thanks.
All right, coming up, your retail rundown. Nike, Lululemon, and LVMH all getting hit in today's session. What's behind those moves and what it's signaling about the health of the consumer? Closing bell. Be right back.
What's next?
Welcome back. The Dow's recent run bringing it pretty close to 40,000, less than 2% away right now. So what stocks might push the Dow over that milestone? Head to cnbc.com/pro for the details, or just scan the QR code on your screen. Up next, Reddit shares slipping on its second day of trading, the details and what its market debut could be signaling about the IPO market. Plus, Best Buy getting a boost. One JP Morgan analyst is getting bullish on that name. He will join us. We'll have that and much more when we take you inside the market zone. We are now in the closing bell market zone. Julia Borston is here with how Reddit fared in its second day of trading. Plus, Deirdre Bosa on a report that Apple is exploring a deal with Baidu. Courtney Reagan brings us big moves in the world of retail. And JP Morgan's Chris Horvers on why he's getting more bullish on Best Buy. Julia, a little bit of a dip in Reddit, but still well above its offering price.
Yeah, that's right. Reddit lost about 3.5% in its second day of trading, but it is still about $1.50 above where it started trading yesterday at $47 and up 43% from where it was priced at $34. So now Steve Huffman, the CEO of Reddit, faces some key challenges. The FTC's inquiry into the company's data licensing practices, including its $60 million deal with Google, New Street Research calling that inquiry a 5% overhang on its $54 price target for Reddit. He also faces some stiff competition for digital ad dollars with larger rivals, Pinterest and Snap, and particularly with Meta, the giant in the space. And then there's also the question of what happens if Redditors turn against the stock. Chatter on Wall Street Bets, the popular Reddit forum, is still pretty mixed. And finally, we'll have to see how Reddit creates a business around subscriptions, the user economy. New Street saying that this business, which Reddit says it's excited about down the line, will take years to build. Mike?
All right. Again, not a bad gain from the offer price at 34. We'll see how it goes from here. Thanks, Julia. Dee, talk about Apple and Baidu and AI ambitions.
Yeah, so first let me say that the chatbots that we're talking about all the time, that's ChatGPT, Claude, Gemini, etc., they're very good at English language queries. China, a totally different case. So if Apple wants AI devices there, enabled devices there, it needs a partner like Baidu. Baidu has the Ernie bot that's already in different smartphones, not just for functionality, but also to navigate the many regulatory hurdles that exist there. Now, Baidu shares, they were up as much as 5% on that report, but they look to finish only about half a percentage point higher. Take a look at Apple, though. It started the week higher on a separate report that it would potentially incorporate Google's Gemini AI into the iPhones. That is the English language version of AI. It looks to end the week with only a slight gain. Actually, now that's turned into a slight loss. So between Baidu and Gemini, some investors are starting to ask, where's Apple's own AI strategy? And that's kind of the takeaway of this week.
Yeah, it seems like it, although I suppose their strategy could be, we will partner. We'll essentially outsource it. You could have at some point maybe said, what's Apple's search strategy? And their strategy has been let Google do it.
Yeah. Exactly, and you bring up a good point. It totally outsourced its search strategy to Google. Not only was that wise, but it brought in, some $18 billion annually to Apple services unit. So that worked out well, but some believe that generative AI is too important to outsource. It needs its own strategy. Doesn't mean it doesn't have one, right? It just sort of raises the stakes for WWDC, which comes up in June. And some think that Apple is going to release its own version or its own strategy of what it's going to do here.
For sure. Yeah, no, it raises the stakes, and we keep hopscotching from one developers conference to the next, it feels like, from now to then. Dee, good to get your thoughts on this one. Courtney, retail, we get the tail end of the earnings, and they're pretty eventful.
Yeah, exactly. I mean, that retail ETF, the XRT, well underperforming the broader markets today. We did hear from Lulu and Nike, and they both put up better than expected results for their quarters, but the disappointing forecast for both looking forward, that, of course, is what's dragging down shares today. I mean, Lululemon down almost 16%. The CEO, Calvin McDonald, did point to weakness in the U.S. consumer almost at the very top of that earnings call. While Lulu's international sales were strong, up 43% in the quarter, mainland China sales specifically growing 78%. Sales in the Americas gained only 7%. Now, most analysts aren't concerned. They actually advise buying on the share weakness here. But obviously, investors are disappointed. Now, Nike's brand turnaround, we know that's been going on for a while, and it continues. Executives there, though, now leaning more into these wholesale partnerships than they did before, when direct-to-consumer seemed to be the entire focus. Nike shares are down almost 7% intraday. And then shares of luxury conglomerate LVMH down more than 2% in European trade. And while it has not put out results recently, it did put up a record 2023. But I think, Mike, it's getting caught up in this fear about what's going on about the consumer, maybe particularly the high-end consumer, because I know we were just talking yesterday about Lululemon and how it doesn't need to discount in order to sell. And so that, I think, is sort of part of this ripple effect fear that's moving even overseas into shares of LVMH, which has historically been extremely strong.
It has been. Of course, also this week, didn't we see some weakness in Gucci's parent as well on the pure luxury side? The Lulu thing is amazing because I get it that, the analysts are saying long-term story hasn't really changed right here, but there seems some sensitivity among investors that of the possibility that maybe not just a broad consumer slowdown, but maybe that the brand is no longer as bulletproof as it has been.
Yeah, exactly. I mean, there are so many brands that stay strong for some time, Nike, of course, being one of them. And look at where they are now, right? They're not strong. I mean, they're still a very strong brand, very preferred by teens and a number of athletes alike, of course. But they're still seeing some weakness. And so that is sort of a worry that I think investors have, that for some reason, at least right now, analysts don't, and they're looking past it. But you've gotten some more competitors over the years. Maybe it's an Alo or a Viore or